Hi, and thank you for joining us today for our Battery Metals Conference. But before we do a deep dive on battery metals, did you know that 80% of our viewers are not subscribers to our YouTube channel? So please subscribe to the channel. Subscribing to the channel will help us build a better community for investors who have an interest in resources. Now let's get on with the conference. Lithium was up over 140% in 2022, and many lithium producers and developers were up over 50% on the year. And this is all being driven by the explosive growth in EVs, having gone from sales of 3 million in 2020 to over 10 million in 2022. So where's the lithium price going in 2023, and where should we invest? To answer these questions, we have assembled some of the smartest people and some of the best companies in the battery metals sector. The conference starts with a macro overview by Andy Miller of Benchmark Minerals Intelligence, followed by Jean-Sebastien Lavallee of Critical Elements Lithium, Daisy Jennings of Benchmark Minerals Intelligence, Matt James of Manganese, Hanna Schweitz of WMC Energy, Trevor Walker of Frontier Lithium, Blake Hylands of Lithium Ionic, Joe Lowry of the Global Lithium Podcast, Kunal Phalpher of Lime Metal, Corinne Blanchard of Deutsche Bank, Keith Phillips of Piedmont Lithium, Robert Mintak of Standard Lithium, and we conclude with a discussion of David Paterson of General Motors and how GM is building out its battery metal supply chain. And as a reminder, we have an open chat on the right-hand side of the screen. Ask a question, make a comment, or just say hello. Remember, we're building a community for investors, and the more you engage, the better it will be. I hope you enjoy the conference. Andy, thank you very much for joining us today. How are things in South Florida?
All good, Jimmy. Thanks. Good to be back with you, and yeah, hope all's well with you.
Andy, 2022 was another great year for battery metals and especially lithium, and I want to find out from you where the lithium price is going in 2023. But before we do that, why don't we just start with a brief overview of your firm, Benchmark, provide us with a little bit of detail and what services the firm offers.
Sure, thanks. Yeah, so Benchmark is a market intelligence and price reporting agency specifically focused on the lithium-ion battery supply chain. So we focus on anything from the raw materials coming out of the ground right through to the battery cells that are being produced and going into your electric vehicles. And our coverage stretches from long-term supply, demand, price, cost forecasting, that type of thing, right through to bespoke consultancy project where we work with major stakeholders along the supply chain to help them hopefully prepare for this rapid build out in the EV supply chain.
Andy, the lockdowns in China are creating havoc on the battery metal supply chain, and as a reminder to our viewers, 70% of all battery production comes out of China. And then on the demand side, governments all over the world are pushing toward decarbonization and electrification, and this is going to increase demand for battery metals. And having said all that, Andy, I want to get your sense on where the lithium price is going in 2023.
Yeah, so there's not many signs of respite really in terms of the pressures that the lithium markets experienced this year. Fundamentally, you know, it's been that lack of supply response that has led to record high pricing throughout the course of this year. You've seen that particularly in the Chinese market. And I think going back to your point about, you know, what's happening in China at the moment, that may give us some signs of some more volatility to come in the future in the Chinese market. But the Chinese lithium market by nature works on a much shorter term basis. There's not as many long-term contracts in the market. And for that reason, the price is more volatile than the rest of the world. But I think what you've seen, certainly since we last spoke, and we expect going into next year, is those prices in the rest of the world as new contracts are reset for 2023. Is going to be that gradual step up in prices from the rest of the world, and that average price coming out of US, out of Australia, out of other producing parts of the world, where you're going to see that gradually approach Chinese levels. So yeah, we're just shy as a global average of around $70 per kg at the moment for lithium. In China, that's closer to 80, and I expect that number to keep on creeping up. But we'll have to see. As you mentioned, I think the flip side of that is China is, of course, a major demand driver where the market is today as well. So how that impacts some of that Chinese demand in the short term, I don't think it's going to have any notable impact in the longer term. But certainly with some of those lockdowns, you have the risk of shorter term fluctuations in the market, which may again add to some of that volatility in the Chinese price.
And I want to get a sense of how tight the lithium market is. How many tons were produced in 2022 and what was the demand?
Yeah, so we have supply reaching just over 620,000 tons for this year. We're on course for that. Demand actually we're projecting will be at over 700. So it shows you there's a massive gap already opening up. Now, yes, there has been a supply response. We are seeing expansions come on in the tail end of the year, and that will continue into 2023. So that deficit will narrow into 2023. But this isn't going to be an issue that's solved in the short term. The issue the lithium market faces fundamentally is that there's such a long lead time to bring new supply to market, which is why we've experienced what we have over the past 12 months, that as you start to see these double-digit growth rates in battery demand just escalate over the course of the coming years, the lithium industry is really just on an accelerating treadmill trying to catch up with where the demand is. So it's going to be a major challenge, across the world to really meet this type of lithium demand, particularly as you talk about that demand diversifying now and moving into Europe more, so moving into North America certainly, and the policy momentum you mentioned at the start really escalating that demand in other parts of the world. It really asks big questions about how secure the supply chains of today are to support that demand growth of tomorrow.
You touched on the spot lithium market earlier, and I would imagine this market is very much like the spot uranium market, very inefficient. But do we have any idea how many pounds or how many tons would trade in the spot market annually?
Yeah, it's a good question. In China, as I mentioned, there is much shorter term contracting in the Chinese market. So that is a bit closer to what you traditionally call it, your sort of spot trades in the industry. So a lot of China, the majority of what's traded in China is more on a spot basis. But if you contrast that to the rest of the world, it's almost the reverse story when you talk about what's happening in the rest of the world. So, up to almost 70% in some cases of producers' volumes can be tied to long-term either supply agreements or long-term fixed contracts. So that gives you that little bit less. And going back to the reason why those prices have only crept up and haven't been it hasn't been as rapid a rise in prices outside of China as what you're seeing inside, is fundamentally tied to that point that the majority of lithium supply outside of China is tied into longer term agreements.
So you bring up a very good point. The price in the spot market is not what OEMs are paying. Maybe you can just give us an idea of what OEMs are paying for long-term contracting approximately.
Yeah, there's a really wide range. You can look at, as we've gone throughout the course of this year, of course, suppliers have been pushing up that lower end of their pricing and making sure that as they refresh these contracts or they refresh the pricing terms in their longer term supply agreements, that number, of course, is ticking up. Despite that, even in the best case scenario, your major OEMs and major battery producers have seen a massive increase in the cost of their lithium going into their battery. But really, you can see the range, a range of anywhere from in the 40s up to in the 60s, really, of pricing, I'd say today. So it is going to be an ongoing issue, and it's one of the reasons why, as you look to control the cost basis of your electric vehicles and the batteries going into those electric vehicles, lithium is becoming an increasingly important component in controlling that cost basis. And that's why you've seen, particularly over the course of this year, a massive push from OEMs to get involved further up the supply chain, whether that be with direct investments, offtake agreements, trying to control and have a footprint upstream, which will, longer term, hopefully allow them to control some of that price volatility in the longer term. So yeah, there is a wide range. And in some cases, what's happening for a lot of producers out there is that these big lithium price increases are just being passed along the supply chain. So that's what's really opening the eyes of the OEMs to, we need to do something about this, because that cost is just being passed through to your cathode producer, passed through to your battery cell producer, and ultimately reaching the OEM. So you're already seeing some kickback, in the Chinese market. OEMs there are, definitely wary of where the lithium price has gone this year, and it's staying that high. And it's an issue that, OEMs around the world are now trying to solve for the future.
And I'm glad you brought up offtakes, because I want to ask you about this. Mercedes recently signed a deal with Rocktech Lithium for an offtake agreement. I believe it's worth around $2 billion for the life of that agreement. CATL, the world's largest battery producer, recently purchased 25% of CMOC, a cobalt producer, for $3.7 billion. But do you think this is a trend that's going to continue on into 2023 and beyond?
Yeah, absolutely. I think for two reasons. One, going back to that cost basis that I mentioned, you are having the downstream users of these materials opening their eyes to the fact that if you have volatility in some of your key components or key raw materials, then you're going to have a significant disadvantage when it comes to your cost basis. So there's the cost aspect of this. I think you also have to layer on top of that what you have within the market at the moment is the pace at which the supply chain can expand is increasingly important. So it's not that when you see a deficit in the market, it's not that nobody's getting material, it's that some people aren't getting material, and you don't want to be one of those producers. So from a security of supply standpoint, from giving the confidence to your suppliers that there will be the demand, which of course allows them to deploy capital a lot faster and sort of ramp their expansion plans at the rates required. And then fundamentally, it all comes back to that cost factor of, if you're a major OEM, if you're a battery producer, and you want to keep bringing down your costs, you have to get involved in the other end of the supply chain. And those case studies you mentioned, I think, are good examples of that.
EVs have exploded in recent years, and going from global sales of 3 million in 2020 to 10 million in 2022. A number of countries, including the UK, Germany, and Belgium, have all said they want to ban the sale of new gas cars by 2030. And then, of course, we've had numerous OEMs expand their EV fleet significantly here in the last couple of years. You mentioned we're already running at quite a large deficit. Is there enough lithium production to meet these goals, or is this just all pie in the sky pipe dreams?
Yeah, it's a good question. Fundamentally, there is enough lithium, right? And that's the point we always come back to, is that we're not talking about something that's particularly geologically scarce, right? There's enough lithium out there. The issue that the industry has is that, one, it's about ramping the existing supply base. So that's from your conventional brine and your spodumene. And you've seen historically that that's not a very quick process. So that there are multiple years of development that are required to bring even your conventional new resources to market. And then on top of that, where you can find a lot of this lithium is actually through assets that aren't necessarily resources that aren't commercially produced from today. So it's about developing new technology. It's about, developing new supply chains to produce those lithium chemicals. And that's a real key point of where the industry is today, because particularly if you look at a market like the US and North America, if you look at a lot of the expansions, there are some fantastic lithium prospects in the country. But a lot of that comes down to development of new technology in many cases, refining new technology. And it's not that new technology can't work. It's just that it adds to the time frame of bringing that material to market. So I think that's something the industry is going to have to overcome. It's not about, is there enough lithium? It's about how quickly can we get the lithium to market to avoid these bottlenecks. And like you said, with all the momentum around the market at the moment, it's not that this demand is going anywhere. What we're doing is just deferring it. We're kicking the can down the road by not having the units available today, which we know the market's going to require. So yeah, it's going to require, a big push from across the industry, from external stakeholders, other types of industries looking towards lithium and lending their expertise to the lithium market. But it's going to be a persistent challenge over the coming decade.
So we spent a lot of time discussing lithium, and I guess the consensus is it's going higher in 2023, but we haven't spent any time on nickel, cobalt, or manganese. Of those metals, which one do you think will have the biggest move in 2023?
It's a good question. I think you have, nickel is always one we look at just after lithium. It's a very different industry in the sense that it's starting from a much larger supply base, obviously a much more established, and of all of these sort of critical mineral elements into your battery, probably the one that could be closest called a commodity, I suppose, in some senses. But when you look at what's going into the battery industry, that's where it really becomes one of these more niche specialty chemicals. And I think you really have to look at the supply chains for that nickel reaching the battery. So it's not, again, just about the units out of the ground of any of these raw materials. It's about that next step in the supply chain as well. It's how do you turn it into something that's battery ready that the industry can actually use in the future. So I think nickel is a fascinating example of that, because you do, like I say, have a much larger supply base, but when you drill down into the detail of what the EV industry can use, and particularly when you layer on some of the sustainability criteria that are now being applied to material, it's not just about getting the units anymore, it's now about getting them in the right way as well. There's a huge amount of concerns, and when you look at where some of the expansions from nickel are coming, of course there's a huge amount in the pipeline, but if you look at where they're coming from, in many cases it may be from areas of the world which Western OEMs would be less comfortable sourcing from, or may have question marks over the processing and the footprint of processing some of that material as well. So I think nickel is very interesting. Cobalt, you have a bit more flexibility in the short term, and as you bring on some of that new nickel, you're going to have some byproduct cobalt. So obviously you have the two forces in the cobalt market, where battery producers want to reduce the cobalt out of the battery as much as they can. It's not going to go, but they're trying to reduce the intensity. And at the same time, as you bring on some of these new nickel operations, you will start to see some new cobalt units come into the market off the back of that. So not that cobalt won't find an issue, but I think that's going to be a bit of a longer term issue the cobalt industry has to solve. And manganese, again, when you look at that, in relation, it's a bit similar to nickel in the sense, of course, you have a much larger supply base, but when you look at who controls the supply of manganese, it's a very small group of companies, again, largely China dominated again. So each of them, that's a very bad answer, I suppose, Jimmy. What I'm trying to say is each of them face their own unique type of challenges, but I would say keep an eye on nickel, certainly.
You and your team have held numerous conferences through 2022, Toronto, Berlin, Cape Town, Perth, and in LA. And in that process, you meet with hundreds or thousands of investors. And I'm just kind of curious what kind of feedback you get from people. Do you think we're still in the early innings of this trade, or are we in late innings?
I wouldn't say later, but I would say we're definitely past where we were. It's been great to be able to, over the course of this year, get back to what we do at Benchmark, which is, yes, conferences, meeting the industry, and getting out to go see sites and see what, where the supply chain is developing firsthand. And I think the thing that struck me the most over the course of this year is how the ecosystem and the community around this supply chain has really evolved in those 2-3 years. We've sort of been away and all locked down, and now you have so many different stakeholders, so many parts of the supply chain that we hadn't even really factored into some of our considerations. When you talk about site selection, for example, you talk about other types of infrastructure that are going to be required for some of these plants, and that really shines a light on that. It's not just the raw materials that are facing a huge amount of strain to keep up pace, but there's a lot of other inputs and infrastructure that has to be evolved to really support this supply chain. So I wouldn't say we're in the later innings. I think we're still in the very early stages, and we're moving on from the point where maybe people were looking just at your lithium or just at your nickel or your cobalt, and now people are almost opening their eyes to the wider ecosystem that's going to have to emerge around this supply chain. And I think that's massively exciting, and I think it opens up a huge many layers of opportunities to play a part in this industry in the future. So yeah, I'd still say we're in the early stages, and there's a huge amount more growth to come. So it's about how do we expand that like I say, infrastructure to meet that demand.
And the people that show up at your conferences, I'm just kind of curious how you would define them. Are they long only funds, pension funds, hedge funds?
It's a good point. Traditionally our events were very much working. Benchmark was established with working with the industry. We were very much suppliers, traders, consumers, along the supply chain. Increasingly, of course, there is the investor interest. So we work with, a huge spectrum, right through from private investors right through to, big funds. But I'd say beyond that, you have to look at the government representation that we're now seeing, which I think is a fantastic addition to the conversation and shows that from a regulatory standpoint, this is being taken seriously. And then, like I say, the participants from really what I consider far afield industries to what we consider, but are all seeing that the knock-on consequences of this rapid build-out, particularly when you talk about the regional dynamics. I think it's really interesting. But myself being based in the US and seeing everything that's happened here over the course of the past 12 months, and you now have industries looking at how can we support this in all different types of ways, whether it be technology, whether it be infrastructure, whether it be partnerships in different from reagents and other inputs just to produce your raw materials. So this has far-reaching consequences. What's going to happen in the industry at the moment, and I think seeing that community expand at our events has been really notable this year.
So bottom line is there's still lots of upside associated with this trade.
Absolutely, and I'd encourage people to look further afield than maybe, the lithiums of the world would always get the attention. Of course, it's a very central component, but there's a lot of other inputs and requirements to fuel this sort of lithium-ion economy, as we call it, of the future. So yeah, lots to be done and lots of opportunity.
And as we wrap up, you've provided a very bullish scenario for lithium and the other battery metals, but what would be the one risk to the lithium price in the coming year?
I think you do have the potential for a faster than expected supply response in some areas of the world. I still don't think that's going to approach that demand. But what you see in the lithium industry and what you have seen historically is that you start to see things like DSO emerge, where you people shipping ore just to fill some of that supply gap. Even with that accounted for, we still don't think the industry is going to sort of meet where the demand side of things is going. I suppose the biggest concern for us going into the next year, or the biggest risk factor, I suppose, is if you have these persistently high and volatile raw material prices impacting your battery costs, what does that do to the short-term demand outlook? If we can't keep on bringing down your battery costs, then it's going to be incredibly hard for OEMs to bring affordable and cheaper electric vehicles to market. So that's something, like I say, the industry has to respond to. It's something OEMs are going to have to take a central role in, like I say, working with their suppliers to control that cost. But you do have the risk that if this cost just keeps on getting passed through to the consumer, then that may have a short-term impact on demand. But I would caveat that with saying that demand isn't going anywhere. A lot of people like to throw around the term demand destruction in lithium and say that ultimately we won't have as many electric vehicles hitting the road. I think if you take a longer-term perspective on this, you look at the policy, you look at the industry momentum that is all now centered around this, we will get there. It's just how quickly and whether there'll be some bumps in the road. And absolutely, this isn't going to be a smooth transition, but it's something that has to happen.
And Andy, I can't let you go without first discussing what big events you have planned for 2023. What is the first big event?
I appreciate it, Jimmy. Yeah, our first big one will be in Berlin. So that'll be in late March. I'd encourage anyone to visit benchmarkminerals.com if you want to find out more details on that. That's the first of our three-part Battery Gigafactory series, which takes place throughout the year. So we do one in one in Europe, which will be the end of March. We then do North America in June, and then we'll be doing Asia Pacific in September. So anyone across the world interested in this subject, I really encourage you to visit the website, have a look, and hopefully join us at some point next year.
Well, Andy, that was a very insightful conversation on battery metals, and I want to thank you for making the time. I would also reiterate and remind our viewers to check out the Benchmark Minerals website. It has a wealth of information with regard to battery metals in addition to all their upcoming conferences. Once again, Andy, thank you.
Thanks, Jimmy. Thanks for having me.
Jean-Sebastien, thank you very much for joining us today. How are things in Montreal?
Very good, very good. Thank you, James.
2022 was a breakout year for critical elements, with the big news being the receiving of all the environmental permits from both the federal and provincial governments, as well as an impact and benefits agreement with the Cree Nation. And I want to touch on all of these achievements, beginning with the environmental permits. Maybe you can just tell us what were the exact permits you received and what do these permits allow you to do?
Yeah, mainly we received the global CA from the provincial government. We also received the approval by the federal minister on the environmental impact study, and we also received restoration plan approval by the Minister of Energy and Resources of Quebec. So mainly these umbrella permits allow us to move forward to apply for the mining lease and the land use lease that are key for putting the project into construction and operation. That is our target for 2023.
And how long did it take to receive these permits?
It take about 5 years to receive all these permits. We start 2015 with the initial baseline on the project, then applying the environmental impact study in 2017, going through several rounds of question and answer with a different level of government, going into the public hearing with the community. I will say we were the first one doing virtual public hearings, so that was a very big challenge. It took a long time to organize. Then having to answer more questions after the public hearing, getting the authorization from the federal in August 21, and the authorization by the provincial / COMEX, that is the entity that is a joint committee with the Cree and the provincial government. We received that approval in November 2022.
Don't you love the permitting process?
Well, that's a very long and, let's say, exhaustive process, but the good thing is that when you get approval in Quebec, it means that you really go very deep in details, and it really cover everything for the benefit of, let's say, environmental impact and social impact. So we're sure we cover all the aspect of the project. So that's a really rigorous process, but we went through it and we have it now.
And you did touch on this, but you did formalize an impact and benefits agreement with the Cree Nation. Maybe you can just tell us how long that took and what it entailed.
Yeah, that's very important for us. We start, let's say, the relation with the community right from the beginning of the project in 2010. It's really a collaboration agreement to work together to develop the project and make sure we, let's say, respect the culture, the social aspect of the community, and also all the mental aspect of the project. So in 2012, we already signed a pre-development agreement, let's say with the local community, with East Main, the Cree government, and the Grand Council of Cree. Then in 2019, we formalized the impact and benefit agreement with the three level of government with the community. So that was very important for us and for the community, just to make it clear.
Another achievement in the past year was an updated feasibility study, which demonstrated very strong economics for the Rose project. And I just want to go over this so we can see how robust these economics are. But maybe you can just tell us a little bit about the net present value, the internal rate of return, and also the life of mine.
Yeah, the mine life of the project is 17 years. The NPV after tax, 8% discount is 1.9 billion US. With a 82% IRR. It's a very, very robust number. That, let's say, study is based on spodumene price chemical grade of 2,500 for the first 5 years. Then we're using 1,560 for the ongoing years for chemical grade. So very conservative price deck for this study. And we're seeing a lot of upside with the actual price of spodumene.
What was the CapEx?
The CapEx is 357 million US to build all the project. That include all the infrastructure, that include the mill, the concentrator, all the mining equipment, the substation, the office, the garage. So that's very up-to-date number also, as the study was filed in July 2022.
And so this is a very interesting point that you mentioned. The net present value was 1.9 billion, and yet the CapEx is only 357 million. It's not often you see net present value being 5 times greater than the CapEx. Does that have to do with the spodumene price and the move it's had in the last few years?
Yeah, it's really linked to lithium price, spodumene price. If we look at the initial study we had in 2017, the ratio was more like 2-for-1 in terms of NPV and CapEx, but we've seen a significant increase in spodumene price over the last 2 years, and we're seeing also long-term price being pretty stable, at least up to 2030.
And maybe we should just touch on the spodumene price, because there is a big range and a big difference between the spot price and also the contracting price. Maybe you can give us a range of what that might be.
Yeah, we're seeing some, let's say, spot price right now on different platform where we set price up to $8,000 US per ton of spodumene. But in terms of contract price, what we're more seeing from different public sources, contract in the range of $5,000 to $6,000 per ton for chemical grade spodumene 6%.
And you mentioned the price that's used in the feasibility study is $2,500 per ton for the first 5 years.
Yes.
And as you already alluded to, it's trading significantly higher than that in both the spot and the contract market. But this project's going to throw off massive amounts of cash flow. And I know at this stage of the game, you can't really go into details about the cash flow, but maybe you can just touch on what it might be over the average life of the mine.
Yeah, I will say based on the study that we have in place now, we're seeing like projected EBITDA in the range of 400 million US. That's based on the, let's say, the price deck that we just mentioned for the study. We're seeing some upside, but I cannot really go more in detail on that question.
Another element which is very important to the mining of spodumene is impurities. And maybe you can just touch on the iron oxide content and how this impacts the economics of the Rose project.
Yeah, the iron content and the mica content are two important aspects in spodumene, mainly as we're doing flotation to produce concentrate. So the fact that we have very low amount of mica in the ore lead to very high recovery. We're not getting like a lot of losses when we extract the mica, as we start already with small amount of mica. And that also lead to high grade concentrate. In every test we've done in the past, we always produce material in the range of 6% grade and plus. For the, let's say, the study, we use 5.5% as it's a standard for the industry for chemical grade, but we're confident we can produce probably a bit higher than that. But really, iron oxide and mica are key for recovery. And also the fact that we have low iron oxide content in the ore lead to low iron content in the concentrate. So that gives us flexibility as we can sell part of the material in the tech grade industry. So mainly for the glass and ceramic specialized material producer.
Jean-Sebastien, as you mentioned, the spodumene which will be mined at the Rose project will be both technical grade and chemical grade. And I just want to create a visual so I can understand this better. But the technical grade is used for ceramic products like glass on my phone, for example, or the top on a stove. Is that correct?
Yes, exact.
And the chemical grade is what will go into a lithium-ion battery.
Exact. That's the one that will be used for conversion to produce lithium carbonate or lithium hydroxide for batteries.
And maybe you can just elaborate on the economics associated with each grade.
Yeah, mainly the let's say there's a link for chemical grade with carbonate price, including conversion cost. But for the technical grade spodumene, the link is really with carbonate price, as there's that the material can be replaced by carbonate, but they need them to remix with silicate. The preferred material is really spodumene concentrate because all silicate are already there for their melting. So as the price is linked to lithium carbonate, you can do the math. You need 8 tons of spodumene for 1 ton of carbonate. Then you apply the lithium content in spodumene concentrate, so that will give you the price. So you can use 1 ton of carbonate price, let's say divide by 8, and it will give you the price for tech grade spodumene.
Jean-Sebastien, I want to touch on exploration now, and maybe you can just tell us what happened in 2022 and what's going to happen in 2023 in terms of your exploration program.
Yes, in 2022, we've done surface exploration. I will say in general, that's like majority of the work that's been done. We identify new lithium showing west of Wabushi project, about 2.5 to 3 kilometers west, over a 2 kilometers trend. That's something that we plan to follow up in 2023. We also expand the trend on Lamar that been drilled in 2015 and 16 with surface sampling that expand the zone over 5 kilometers in terms of the trend with anomaly in tantalum, lithium, and cesium. The plan is to start the drilling, and I think drilling is probably about to start very soon on the Lamar project, where we plan to drill between 5,000 to 10,000 meters this winter with the objective to delineate initial resource on that project.
Jean-Sebastien, I want to move on now and discuss your balance sheet and your financial needs. Now that you have many of your permits in place, project financing will become of paramount importance. And so I want to discuss your various financing options, and maybe you can just take us through the various possibilities that you and your team are looking at.
Yeah, right now, just start by, let's say, where we stand right now. We just filed financial recently, so we're at about 30 million in the bank. That's sufficient to cover all the work we have to do for now. That include the owner team, the engineering work, all the detailed design that we're in order to move the project forward and ready for the construction. In parallel to that, we're working on, let's say, project financing and strategic process with our advisor, Cantor Federal. That's all public. The process, mainly, if we look at the project financing, if we assume a 50-50 debt equity ratio, we're looking for something around 200 million of debt, 200 million of equity. The nice thing is we kept all the optionality as we kept 100% of the material available for offtake. So for us, that was very important. This maybe is linked a bit to the fact that it took a long time for the permit, but even now we have 100% of offtake available. We're using that in our discussion with strategic, and the objective is to have a strategic partner that will, let's say, participate in project financing with a significant amount of equity in exchange of the offtake. That's mainly the focus of the process we're in now.
And when you talk about a strategic partner, could that be an OEM? Could it be a battery manufacturer, the provincial government?
There's a large variety of group that start from, let's say, cathode manufacturers, OEMs, battery manufacturers, can be also trading companies, mining companies. There's a large range of opportunity and interest.
And once again, I don't want to put you on the spot, but in terms of a timeline, when would you like to finalize this?
But in terms of timeline, the objective is to finalize something by the end of Q1, because we have the objective to start, let's say, the site preparation during the summer and start the construction. So if we want to achieve that objective, we're pushing and working hard to get that, let's say, strategic in place by the end of Q1.
I want to move on now and discuss your valuation. You have agreements with the provincial and federal governments, as we already discussed. You also have benefits agreement with the Cree Nation. You and your team have done many things to de-risk this project, but Critical Elements is still trading at a discount to many of its comps, and many of which are not nearly as advanced as Critical Elements. Why do you think that is?
But I will say there is maybe, let's say, some interrogation on how we will finance the project construction. I think this is one of the key next milestones for the company, and our objective is to reduce dilution as maximum for that project financing. That's where we're putting a lot of the effort. Also, I will say, as we were waiting the permit for a very long time, we've been maybe a bit quiet. But now we are reaching out as much as we can to make sure people are aware of Critical Elements and know the project and the company.
Jean-Sebastien, one other element I want to bring up, and that's infrastructure. That's very important to the creation of any mine. And given that this is in northern Quebec, maybe you can touch on that.
Yeah, we're very lucky with the project. Yes, it's northern Quebec, but there was a lot of hydropower development in the past several years. So we have a road access that goes right to the project. There's a power line that goes right over the deposit. There's also an airport close to the project for the fly in, fly out for the worker. And we are also in discussion with the community in order to work with them for the worker camp for the mine life of the project. So very lucky. That's, I don't know the amount of millions that we're saving in terms of infrastructure, but all these infrastructure are in place.
And you did touch on power, and we should bring up the fact that Quebec has the cheapest power or electricity in North America. Maybe you can just expand on that.
Yeah, there's a lot of advantage of that power. First, it's hydropower, so there is mainly no carbon footprint from that energy. And the price for power in Quebec is one of the lowest around the world. We're talking about 5 to 6 cents per kilowatt for the power.
Jean-Sebastien, as we wrap up, can you summarize what investors can expect in terms of news flow from critical elements throughout 2023?
Yeah, 2023 will be a big year for critical elements. You will see a continued improvement in the, let's say, construction and operation team by adding a full team for the construction. You will also see progress on project financing. That's one of our main goal to achieve by Q1, getting a strategic partner investment off taking place in order to be able to start the construction in the summer. Also, you will see exploration on the different project that we own. We plan to restart drilling in January on the Lamar project, and also start the construction during 2023.
It sounds like 2023 is going to be a busy year indeed, and I want to thank you for making the time today. That was a great overview and a great update, and we look forward to hearing the news on the strategic investment in the coming months. Once again, thank you.
Thanks, James. It was a pleasure.
Hi, Daisy. Thank you very much for joining us today. How are things in London?
Hi, Jimmy. They're good, thanks. The weather's just taking a turn for the worse now that we're entering winter, but, you know, going along nicely.
Daisy, this year has been a challenging year for many asset classes, but not for EVs or lithium-ion batteries. Spot lithium is up over 100% on the year. Many of the battery metal stocks associated with lithium-ion batteries are also up. And the big driver is the growth of EVs, having gone from 55,000 in 2011 to 3.1 million in 2020 to 10 million in 2022, and there's no signs of that abating. The most important element in an EV is the lithium-ion battery, and this is where I want to focus our discussion. Why don't we just start with the very basics? What are the components of a lithium-ion battery, and what are the metals used in each component?
Yeah, so a lithium-ion battery is essentially made up of a positive electrode, so the cathode, which is typically composed of lithium, cobalt, nickel, manganese, or iron phosphate, depending on the chemistry. And then on the other side, the negative electrode, so the anode, which is typically comprised of natural graphite or synthetic graphite, or a blend of both, and perhaps some silicon as well. Then those components, so the anode and the cathode, are printed on foils and rolled up into what's sometimes known as a jelly roll. And what you get is ions traveling between the anode and the cathode through the electrolyte. So that's how the ions are actually transferred. And there's a thing called a separator between the anode and the cathode that prevents any contact between the positive and the negative electrodes. So in principle, it's those four main components that are made up of a lot of different metals and specialty chemicals.
That was a great explanation. Maybe you can just tell us what are the percentages of each metal used in the lithium-ion battery and which ones are most important?
Yeah, so That kind of all depends on the chemistry of the battery. You kind of have two probably main categories of lithium ion batteries that are used in electric vehicles. So you've got LFP cells, which use a cathode composed of lithium and iron phosphate, where at the moment, lithium, with the price it's at, is making up a significant portion of that LFP cathode. Then kind of what you have on the flip side are nickel, cobalt, manganese cathodes, which are often called NCM. And they have varying amounts of each battery material in them, depending on the quantity you want and the usage that you want for that cathode. So you might get an NCM 111, which has equal amounts of the three metal oxides in it. So nickel, cobalt, and manganese, and also some lithium. You have an NCM 523, which is 50% nickel, 20% cobalt, 30% manganese. An NCM 622, which is 60% nickel, 20% cobalt, 20% manganese, and an 811. So there's a pattern forming here, and that's 80% cobalt and 10% of the others. Sorry, 80% nickel. And 10% of the others. But it's really important to stress that lithium is present in all of these chemistries, so the LFPs and the NCMs. Lithium is there in good quantities throughout, and definitely enough for these cathode prices to have been affected by what's been happening with lithium prices.
It's amazing the complexity associated with all these devices we just take for granted, like our iPhone, we just plug it in, or our EV, we just plug it in, and we don't even think about the chemistry behind it all.
Absolutely, it's a fascinating world to kind of dive into, and there's a lot going on.
Daisy, you mentioned that a big expense associated with lithium ion batteries is lithium and the cathode, and I want to spend a little more time on the cost structure of these batteries, but maybe you can just tell us a little bit about the cost associated with each segment of the battery, beginning with the cathode.
So with the cell, really you're looking at a good chunk of the cost being in the cathode. Probably around 50 to 60% of the cost of the cell is coming from manufacturing your cathode. And then anodes make up a good chunk as well, the other side of the battery essentially. Graphite is typically cheaper than the raw materials that go into cathodes. So you're probably looking at 10 to 20% of the cost of the battery for the anode, depending on whether you're using natural graphite or synthetic graphite. Synthetic graphite is a little bit more costly than natural graphite, and that can push up the cost of the anode within the cell. And then the rest of it is the other components. So the separator, the electrolyte, and the packaging materials for the cell are probably about 10% of the cost combined. And then any processing costs at all involved with manufacturing lithium ion cells make up kind of the final 15 to 20%, depending on where you're manufacturing those cells and the technology that you're using.
And what is the overall cost of a lithium ion battery to an EV? I know this can depend on many variables, such as the size of the battery pack, but maybe you can just give us an approximate cost.
Yeah, sure. So with kind of where raw material prices are at the moment, your price for an EV battery cell will probably be between 8,000 to 12,000 per vehicle, depending on the pack size. So if you take a pack size of somewhere between 65 to 100 kilowatt hours, which represents kind of most mainstream EVs in the market at the moment, that would be the figure for the cost of your cell within the electric vehicle.
And if we take the midpoint of that $8,000 to $12,000 range, let's just say $10,000 on an $80,000 EV, that's 12%. Do OEMs care on the move on in lithium and the actual cost to a lithium ion battery, or is this price too small or insignificant?
So OEMs are really kind of starting to pay attention to this. Previously, you know, the cost of lithium ion battery cells has been going down over the last decade as all these kind of technological advancements have been being made. So previously, probably no, but with raw material prices rising, it's definitely something that they're starting to switch on to. kind of the spot prices that you hear for lithium, that are the headline prices, aren't going to be the prices yet being absorbed by the OEMs, but certainly when the contracted prices that they are paying for their raw materials start to translate through and are, you know, directly linked to what's happening on the spot market, that's when the OEMs could start to be paying those very, very high prices for the vast majority of raw materials that they're purchasing. And that's when a decision is made between passing the cost down to the customer, which is generally what happens throughout the supply chain anyway, or absorbing that price in order to keep their vehicles cost competitive against ICEs. So it's definitely becoming a big factor for OEMs and something that they're having to consider.
And just a follow-up question, you mentioned earlier that the range for an EV battery is between $8,000 to $12,000 per car, depending on the size of the battery pack. But maybe you can just touch on the cost on a kilowatt per hour basis and what that trend has been in the last 10 years.
Yeah, sure. So as I said before, prices on a kilowatt hour basis have massively been declining over the last probably 10, 20 years, or essentially kind of the modern lithium ion battery era. Prices were above $1,000 a kilowatt hour back in probably 2010. So if you fast forward, you know, 10, 11 years to what they were last year, which is more like $110 or $120 per kilowatt hour, that's a massive, massive decrease in the costs of lithium ion batteries. And really this year and the second half of last year is the first time that we've started to see year-over-year increases in cell costs because of what raw material prices have been doing.
One of the biggest constraints with EVs is battery size and available charge. The top range for an EV is the Lucid Air. It has a maximum range of 520 miles or just over 800 kilometers. The top of the line Tesla S has a range of 400 miles or 650 kilometers. But most EVs have a range somewhere between 200 and 300 kilometers. When are we going to see more consistency with these batteries, and what changes in technology might we see in the coming years that will really increase the range?
Sure. So those kind of high nickel cathodes that I mentioned earlier, the NCM 811s, have certainly been a big breakthrough in improving EV range over kind of the last year or two. It is very much a US focused kind of goal to be increasing these ranges. Typically, EV users in Europe and in China, where kind of the EV industry is focused, are generally happier with shorter range vehicles on the whole. Of course, there will be some people who want the longer range vehicles, and definitely over in North America, it's a real focus. But aside from kind of the high nickel cathodes, solid state batteries have the potential to improve range for EVs. That is a technology that is still quite a way off at a commercial scale. These are batteries that use a solid electrolyte and have a lithium metal anode. So there's developments there at lab scale and at pilot scale, but we probably won't see breakthroughs in this technology until the end of the decade or the beginning of next decade. So it's definitely still a challenge at the forefront of the industry to keep breaking those range barriers and keep improving what these electric vehicles can do.
Daisy, as we wrap up, Benchmark publishes amazing research on anything and everything to do with the battery supply chain. What specific research does Benchmark publish on lithium-ion batteries?
Sure. So we have our Gigafactory assessment, which is a monthly assessment that tracks the build out of the lithium-ion battery pipeline. And we also have our battery database, which is a forecast that comes out quarterly and takes a look at the supply-demand balance of lithium-ion battery cells and how we expect to see that grow all the way to 2040, and how we expect the market to be balanced as well based on all these announcements from the pipeline against consumer demand for electric vehicles.
Daisy, that was an insightful conversation on lithium-ion batteries, and I want to thank you. And to all of our viewers, I would remind you to check out the benchmarkminerals.com website. It is a wealth of information on there on anything and everything to do with lithium-ion batteries in the supply chain, and also their upcoming webinars. Daisy, once again, thank you.
Thanks very much, Jimmy. Thanks for having me. Good to chat.
Hi, Matt. Thank you very much for joining us today. How are things in Sydney?
Very nice. The water's great, and it's good to be here with you today.
Thank you. You're typically based in London, but you're in Sydney. What is going on there? What brings you to Australia?
So over 70% of our shareholders are based in Australia. So I've taken the opportunity to come down here and meet with them in both Sydney, Melbourne, Perth, and also to present the Euro Manganese story to, additional funds down here.
Matt, before we do a deep dive on Euro Manganese, why don't we start with the very basics? Explain how manganese is used in the lithium-ion battery.
So manganese, or high purity manganese, is used in the cathode in the chemistry. So nickel, cobalt, manganese are the main cathode metals. Manganese is a small but very essential part of those cathode chemistries. Nickel is the main metal, and manganese stabilizes the nickel, similar to the role that actually cobalt does. What we're seeing though is manganese is significantly lower cost than the other battery metals. So we're seeing more manganese being included in the content of the batteries, which allows them to decrease the cost of the battery, making the electric vehicles more affordable.
You've already touched on this, but I just want to clarify one point. There is a big difference between manganese and high purity manganese. Can you just repeat or tell us again what the significance is between the two?
Over 90% of the manganese that's mined today goes into the steel making in terms of ferroalloys. About 8% is further refined into a high purity form, but that's like fertilizer grade or technology, some technology applications. It's only about 1% of the manganese that's refined into what we call ultra pure manganese, where the purity is like 99.95%, and that's the high purity manganese that ends up in the batteries. It's the impurities which are really important to get them really, really low, because that relates to the safety issues of battery shorts if there are too many impurities in there. Today, over 95% of the high purity manganese for batteries is processed in China. There's no capacity in North America, and in Europe there's only a very small amount produced, like 2,000 tons per annum. There's some high purity metal produced in South Africa, about 28,000 tons. Just to put that into context, our plant, which will be the only plant with its own source of production in Europe, is aiming to produce 50,000 tons per annum.
Matt, let's move on now and discuss your project, which is in the Czech Republic. And the Czech Republic is not a country we associate with mining. Is there a strong mining industry in the country? And if so, how supportive is the government to mining?
Yeah, so there is mining today in the Czech Republic. It's mainly coal mining, but it has a long history of mining in the Czech Republic. It's actually where a lot of its wealth came from. About a third of the silver that was produced in Europe in the mid-centuries came from actually very close to the region where we are. And the town's crest actually has a hammer and a pick on it. So the current government is a business-friendly, sort of slightly to right of centre government, and that was voted in only about 18 months ago. And they are very supportive of us in terms of the actual, as is the local municipality, all very supportive of the project.
Matt, one of the interesting features of Euro Manganese is that you will not be actually mining the metal in a traditional sense, but rather be producing it from the tailings of a past producing mine. Can you just expand on this, please?
The past producing mine operated between 1950 and 1970s. It was a pyrite mine, and they used that to produce sulfuric acid. They didn't take manganese from that mine, and therefore there's now a very large 27 million tons historical tailings area that has manganese very evenly dispersed throughout it. It's a carbonate ore, which means, as opposed to an oxide ore, which most manganese minerals are, which means we don't have to roast it before we can actually leach it. And that has some great environmental and cost benefits. And the fact that it's already previously mined, we don't have to do any blasting, crushing, even grinding. It's all very finely fine-grained material. So all we have to do is excavate it and put it into a slurry and pump it across to our plant. So, but this tailings area today is not lined. And so it's actually a source of pollution by leaching sulfates into the groundwater every day. And one of the benefits of our operation is that as we excavate this material and we put our tailings back to the same place, we will properly line and cap that our tailings, and that will stop that ongoing pollution into the area. So it's quite a unique project. It's as much a recycling and a reclamation project as it is a manganese mine.
Interesting points. And I'm curious, what would the grade be from the tailings and how consistent is it?
So it's very consistent. It's relatively low grade, so we're at 7.5%. But one of the very first steps in our process is magnetic separation. So we can reject 60% of the mass and more than double the grade of the material. So we process about 15% manganese in our plant.
And how many tons will you process annually?
So we'll put in about 1 million tons of tailings per year into the plant and produce about 50,000 tons of manganese metal equivalent. We actually produce it as a manganese sulfate, and 1 ton of metal goes to 3 tons of sulfate, and so we will produce about 150,000 tons of sulfate equivalent.
It's amazing you can produce such a profitable metal from the tailings of a past producing mine.
Yeah, but you know, not having to really have a mine, develop a mine and all that associated mining equipment and crushing and grinding means that, you know, it's a very low cost operation from a mining perspective. It's I think even below 5% of our overall costs. So that helps us make it economic.
So a big part of the Euro Manganese story is the processing of these tailings. You currently have a demonstration plant, and eventually you're going to move that toward a commercial plant. Can you just tell us about this process?
So we've done runs in a pilot plant where we deliver kilograms of product to potential customers. But now we're going to a plant which is about 100 times bigger. Our demonstration plant has been shipped to the Czech Republic, so it's on site, and we're now starting to commission that plant. And then obviously the commercial plant, we're at feasibility study stage for that plant.
Matt, I'm glad you brought up the feasibility study. That was released in July of 2022. Why don't we touch on the economics associated with the feasibility study, net present value, internal rate of return, and then touch on the CapEx?
Okay, yeah. The feasibility study was completed in July, and it's I was very pleased with the economic analysis. It shows that on a base case, our net present value post-tax is $1.3 billion. On our upside case, that moves to $1.8 billion. Internal rate of return for the base case is about 22% ungeared, and robust margins in the economic analysis as well. The capital cost is $757 million US. There is over $100 million of contingency in that number, and also given that it was priced in Q2 this year in Europe, it was a high price environment. For example, steel and concrete were quite high. We are seeing steel come down in price in Europe now, so that should help with the economics. And we're also planning to do a short piece of value engineering once we start the engineering, procurement, construction process.
You mentioned the CapEx is $757 million, and a big part of the Euro Manganese story is the project financing. Maybe you can touch on that and tell us exactly how you're going to finance this project.
Yeah, so we've appointed Stifel out of London as our debt advisor. They have modelled the project from a full debt perspective, and it's showing very strong debt service cover ratios. What that means is that we can gear the project to 65 to 70% debt. They've had very good discussions with the European Bank of Reconstruction and Development, who's our second largest shareholder. They have strong interest to be a cornerstone debt provider. They've also had good conversations with the European Investment Bank, and we fit squarely into the mandate that the EIB has to support the energy transition in Europe. And so between those two, we expect the majority of the debt to be funded. And we're also having good conversations with the export credit agencies, ESG-focused funds, and also the typical project commercial banks. So I think the debt is very well supported. So then that will leave the 30% or 35% equity perspective to be financed. And what we're looking to do there is to have a partner from the industry, ideally an automotive OEM, invest in the project at project level. That will enable us to receive capital cash from that investment, let's say 10 to 20% of the project. That OEM will then also be funding their share of the project from an equity perspective. And with that equity investment into the project level, should also re-rate the stock. So then we'll go out to some the public markets and also some other strategic private placements at the corporate level. And we feel that that's the best strategy to re-rate the stock and avoid dilution, a significant dilution for the current shareholder base.
And this is the trend that we've seen in the last couple of years. OEMs are going straight to the source and entering into these either an equity investment or an offtake agreement.
Yes, and so the equity investment would be linked to an offtake agreement for the OEM. And you're right, they're really they recognise that their weakest link in this transition to a new technology is the raw material supply for the battery metals, and so they're moving upstream to secure that supply, and they're even moving upstream to build their own battery plants as well.
Matt, given that you are processing the tailings from a past producing mine, does Euro Manganese have any liabilities or environmental liabilities associated with this project?
No, we don't. The environmental liabilities are held by the government. When Czechoslovakia broke up between the Czech Republic and Slovakia, the government took over all industrial environmental liabilities at that time. So we don't have any liabilities on that plant site.
Matt, another element to the Euro Manganese story is the potential to produce high purity manganese in Quebec. You just came out with a press release on this in late 2022. Can you just elaborate on that, please?
So in Quebec, there is an industrial battery park being created in a location called Bécancour. In there you have GM POSCO, BASF, and Ford has also been associated with it, but they haven't announced anything just yet. What we're going to do is examine the option of taking an intermediate product from the Czech Republic, which is a high purity metal, into Quebec, into Bécancour, and we're completing a scoping study on what we call a dissolution plant. And that will take that metal, dissolve it in sulfuric acid to produce the sulfate that those cathode active material plants, GM POSCO and BASF, require. And because we're located in the same place, we can actually skip some of the end processes of crystallization, drying, and the idea is to pipe that material directly to those plants. Actually, Lavallee, the nickel company, has just announced a 25,000 ton agreement with GM POSCO at Bécancour, where they're going to do exactly the same thing. They're going to take the nickel into metal, into Bécancour, dissolve it there in sulfuric acid, and pipe the nickel sulfate to these plants. So it's a very exciting opportunity. It's optionality for us at the moment. And like I said, we're just completing a scoping study, which should be completed by the end of this year. And it allows us to address that North American market with local production, which is potentially very important from an Inflation Reduction Act incentive perspective. And it also gives us almost like a bridgehead to a longer term strategy of building a fully integrated North American supply chain alongside our European integrated supply chain.
Matt, the province of Quebec has done an excellent job of embracing the battery metal sector. Maybe you can just speak to some of the incentives that they have offered various companies to start production in the province of Quebec.
The Quebec government has a division called Investment Quebec, and they have a very structured program of financial support that they're offering to build this battery hub in Bécancour. And the incentives could be up to 25% of your capital costs in various different forms. But that's obviously, a significant advantage. It's not only that, but Quebec has, particularly Bécancour, 100% renewable power, hydropower, at a very low cost. It's got a good, sophisticated local qualified workforce, great rail and road infrastructure down into the US to service that US market. So it has a number of advantages about why Bécancour is attracting all of these companies. And I'm sure that Quebec has going to develop other sites as well to build out this battery industry.
Matt, as we wrap up, maybe you can summarize for investors on what they can expect in terms of news flow here in the coming months.
I think the near-term news flow is our demonstration plant, which we're commissioning now. We're looking to produce on-spec material from that plant in Q1. Alongside that, we've put out our EPCM, Engineering, Procurement, Construction Management tender documentation. We're receiving bids in December and looking to appoint that contractor in Q1, probably towards the end. That will allow us to start our basic engineering and procurement strategy for long lead time items, for example, in Q2. Permitting, we're submitting our EIA very shortly. That's a 6-month process. Once we receive that approval, we can then submit our land planning and construction permit. So that's again a 6-month process. So we have about 12 months of permitting in front of us, but I'm not concerned about getting those permits given the ESG characteristics of the project. I think one of the most important upcoming events will be announcing our offtake contracts. We are in a fairly structured process at the moment, and we've received indicative bids from multiple parties along the value chain. We're now driving those towards term sheets and then offtake contracts into Q1, Q2. That will allow us to then put that financing in place that we spoke about from both a debt and equity perspective.
And I'm sure when that news becomes public, you're going to see a significant re-rating in your stock.
I think that's a real opportunity. I think the stock is quite low cost, at the moment. There's a lot of value to be delivered in this next year, and I think the stock will re-rate to reflect that.
Well, Matt, I want to thank you very much for being with us today and for educating us on the importance of high purity manganese in the lithium ion batteries. Once again, thank you. Thanks
very much, James.
Did you know that every time you hit the subscribe button, your name goes into a draw to win $1 million? I'm just kidding. But if you do subscribe, it really helps us build our channel. Thank you for subscribing, and thanks for your support. Hanna, thank you very much for joining us today. How are things in Stockholm?
Hi, Jimmy. Thanks for having me. Stockholm is good. It's getting dark earlier and earlier, but otherwise it's all fine.
Hanna, you have a very interesting background in the trading of battery metals, which includes lithium, cobalt, and nickel, and this is what I want to focus our discussion on today. But before we do that, why don't you give us a brief overview of your firm, WMC Energy? Where is the firm based and what services does the firm offer?
Sure. WMC Energy is a commodity merchant. We are specialized in nuclear fuel and lithium-ion battery metals. So we arrange supply contracts, financing solutions, and risk management services for various customers in the respective value chains. After becoming the world's largest trader in nuclear fuel, which was really the core in the start of WMC, we expanded our portfolio, so we now also include the battery materials. We also have an asset development business called Liminal, where we focus on developing processing facilities for materials that can go into lithium-ion batteries. We are currently 20 employees with a head office in Amsterdam.
And prior to joining WMC Energy, you also worked at Northvolt. Maybe you can just touch on Northvolt and what exactly you did there.
Correct. So Northvolt is the Swedish gigafactory founded by 2 guys from Tesla. I was in charge of buying all raw materials they bought for the cathode side of the cell. So that was the nickel, cobalt, manganese, lithium, also the copper and aluminium foil.
And in your current role at WMC, what does a typical day look like? I'm curious, are you on the phone all day speaking with miners and producers, seeking out supply for OEMs?
So a typical day, there are all quite different actually, but usually I start the day by reading news. There are times when deals are made official or other kind of press releases from companies almost on a daily basis. So that's always interesting to keep up with. Some days we are also more busy with trading activities. or other days it could be that we are more focused on discussing and solving financial difficulties for our parties. So we work a lot with different financial solutions.
And I'm glad you brought that up, because that's another unique feature of WMC, is that you and your team provide these financing solutions for junior mining companies or lithium companies. Maybe you can just touch on that and what exactly that looks like.
Sure. So, I mean, it could be all junior miners. They require a large amount of capital to really bring the mine into production. They could also need assistance in connecting supply with demand, and that's where parties like WMC can provide support. So this support could be really financial nature, so like financing solutions, debt equity, or working capital. And sometimes the support is more in operational nature.
Hanna, I want to move the discussion on now toward the lithium-ion battery. There are currently two primary types being used in EVs, one of which is the LFP lithium-ion battery. The other one is the NMC. Maybe you can just tell us the difference between the two battery types and why would an OEM prefer one over the other?
Sure. So in fact, there are more than two types, like you mentioned, and they are usually named after the chemicals used in the cathode side, so the positive side of the cell. So the most common one would be the NMC, which is nickel, manganese, and cobalt cathode. This cathode offers a very high energy density, so it gives the car longer driving range, for example. However, this battery is also quite costly due to the high value of the metals that it contains. On the other key cathode type, which is the LFP, short for lithium iron phosphate, this battery has a lower driving range, but it comes with a reduced costs. So generally speaking, you could say that NMC cathodes are more popular in the Western world or for premium brands, and the LFP cathode would be currently more common in China. The OEMs will actually use different chemistries for either different brands in their portfolio or different regions where the car is sold. It all depends on how they want to, optimize certain characteristics of the battery, such as the energy density, the cost, the lifespan, or something else.
So just to summarize, the NMC uses lithium, cobalt, nickel, and manganese. It has a longer range, but because it uses nickel and cobalt, it costs a lot more money, whereas the LFP does not use nickel and cobalt. It has a shorter range, but the price of the battery is cheaper.
Yeah, correct. You could also in an NMC have different ranges of these three metals. So you can have an NMC 111 where you have equal parts of all three metals. Or you have an NMC 811 where you have 8 parts nickel per part manganese and cobalt. So you can have everything in between there. It also always have the lithium there as two, of course, as either carbonate or lithium as hydroxide, but it's not represented in the cathode name.
So I want to discuss the pricing associated with lithium, nickel, cobalt, and manganese. Maybe you can just touch on that and where they are trading, because I want to determine exactly how OEMs look at these metals when it comes to the construction of the batteries, and a lot of their decisions are based on pricing.
Yeah, so if you look at lithium, for example, you're seeing skyrocketing prices. New record high prices are reached every day. So that's also why you have seen more and more development in other chemistries, such as high manganese, for example, to compensate either high costs, so you can actually make the cell a lot cheaper with that. Some metals have also been quite difficult to totally remove, such as the cobalt, because cobalt is in the battery for stability, so it becomes a safety issue. So it's a lot of engineering done before you can really engineer it out of the cell completely.
Hanna, can you tell us what the cost of lithium, nickel, cobalt, and manganese is?
Sure. So lithium would be priced at around $70,000, a bit depending on which region you are and if you are going for carbonate or hydroxide. Nickel is around 25,000, cobalt around 50, and manganese being the cheapest one, which is around 2,000 to 3,000.
And so given the expense of both nickel and cobalt, I guess that speaks to why OEMs are always changing the chemistry of these batteries, because they want to produce the cheapest battery possible.
You want to produce the cheapest battery for sure, but you also want to produce a really good battery. So you can also play with the amounts on how much you want because of other characteristics that you really want in your cell. So if you reduce the nickel too much, you will not have the same energy density. The car will not be able to drive as far on one charge as it would if you would have higher nickel, for example. So it's really about optimizing the different characteristics you want, where cost is definitely one of them, energy density being another one.
So let's move the discussion now toward trading, because that's what you do, is the acquisition of these raw materials. But maybe you can just speak to the trading side. How hard is it to acquire lithium, cobalt, and nickel in this current environment?
I would say that the metals are a little bit different. I mean, if you look at lithium, for example, there are today only a handful lithium players that are really producing currently. I mean, it's a handful. It's Albemarle, Tianqi, Ganfeng, SQM, Livent. Those are the ones that really produce lithium today. So if you want to have lithium today, you have to go to those the big ones. You can try to find spot volumes from them or from traders, but the spot market in lithium is really not developed yet. It is there, but it's not big, and it's definitely growing when the industry is growing. Nickel, for example, is a way bigger industry. It's not depending only on EVs, on batteries like the lithium is. So in nickel, you have a more developed spot market. So you have big traders that you can choose from as well if you don't go directly to the mining companies. The same for cobalt. Manganese is a really special metal as well, because you have almost all supply for battery manganese sulfate coming from China.
And maybe you can just speak to what a typical contract would look like, and how a contract for an OEM would be different for a contract for somebody who's buying for the short term, just in terms of quantity, pricing, delivery, delivery date.
Yeah. So for an OEM, I think one special thing to keep in mind is that they would like always to have large suppliers with large stable volumes coming from the same source with the same quality all the time. You have to qualify each material in your battery before you can really put the car on the road. In order to do that, you start with small samples of material, you produce small amount of cells, you test them, you do more, and you test them a long time. You even have cases where it takes up to 1.5 years to qualify a new lithium supplier. So that means that the contracts that they do will be big and will be very long. It's not worthwhile to do this costly and lengthy qualification period for just a spot lot. You could buy spot volumes if it's coming from the same suppliers that you have already qualified. Because then you don't have to do all the same testing again.
And in terms of delivery, how far out would a typical contract for an OEM be? Like, are we talking 2 years out, 5 years out?
I would say rather the longer the better in many cases. A lot of the contracts are really long, and especially if you look at the OEMs now going into getting closer and closer to the mining, even making deals directly with the mining companies, they tend to be very long. But you always have certain parameters that could be moving in a contract. If you buy nickel on a 5-year contract, you will always have the LME nickel part of the price that will be moving during this contractual period. But usually the contracts are for a quite long period.
And if an OEM enters into an offtake agreement with a development company who's not even producing yet and might not be producing for 5 years, how can they actually determine the quality of that lithium and whether or not it's battery grade?
You basically can't. You can't guarantee that it's battery grade before you have tested it, before it has been produced. What you do is that you can make still a contract, but you have certain parameters in the contracts that needs to be met, such as the qualification, such as the mining company reaching the specification that they have to reach.
And maybe you can just touch on the spot market. My sense is the lithium spot market is very much like the uranium spot market. It's not very transparent, it's opaque, and you can't buy a large quantity there. What is the lithium spot market like?
The lithium market, and especially the spot market, is still really in its early stages. The spot market is very small currently. And also you could even say that if you want to look at the price, for example, the spot price might not always be the ideal in the identification of the value of the lithium really. The lithium prices are also backwardated at the moment. So if you look at more of the forward prices, maybe you will get a better picture of what the lithium is really worth. But I think as the market develops and the spot market will become bigger, you will have better possibilities to purchase volumes in the spot market.
And so if you look at the benchmark index, for example, for lithium pricing, it's up over 100%. It was up over 400% last year. And I just want to get a sense, like how active is that lithium spot market, and how many pounds or tons would trade there annually? Do we know that? Is that information public?
No, I don't think it is. You also have in lithium, you still have different kind of indexes. In the other metals, you basically have only one that everyone in the value chain has aligned to, for example, the LME nickel. In lithium, you have prices coming from a variety of institutions. So you have the benchmarks, you have the fast market, you have an Asian index. I think as the lithium industry grows, you will see one of these taking a bigger share, which means that it will be a bigger market, and then it will be easier to also determine what the real price of the lithium should be.
Another issue that's very important for OEMs is sustainability and the acquisition and sourcing of raw materials. The primary component that goes into a lithium-ion battery is lithium, and there's two types, and maybe you can just touch on these two different types and what the environmental impact of the two types are for OEMs.
Yes, so the two types that are used in the batteries are either lithium carbonate or lithium hydroxide. Lithium is also produced in two different ways. You can use hard rock mining, or you produce from brine. So hard rock mining is typically from a sustainability perspective, it uses more chemicals. They produce more waste products and in general have a higher CO2 footprint. A brine producer have a process of removing lithium from these underground deposits of brine water that also have an environmental impact, but it's quite different from the hard rock. So the process from a brine producer involves pumping these brines into ponds, and they let the solar evaporation basically take away the water so they can extract the lithium. And the negative impact in that is, of course, that they are consuming significantly more groundwater. I think that it's more and more common for all the OEMs to perform these kind of LCAs, so-called life cycle assessments, where all the products they use in their battery, they track all the environmental impacts from several aspects, so both from the CO2 or from the water usage and other to base their decision on which one to buy.
And we should also touch on cobalt, given that 70% of all cobalt comes from the DRC. How can an OEM ensure that the cobalt from the DRC is sustainable?
That's a good question. I think the OEMs and the battery producers doing this sourcing have different strategies when it comes to this. Some of them choose to source only outside of the DRC. As you said, it's 70% from DRC, so 30% is coming from other regions. So basically you can source outside of the DRC to basically avoid the risk. Some of them will instead engage with the large mining groups in the country. You also have the ones that will engage with the artisanal and small-scale mining groups in the DRC, basically as a way to provide economic support for the Congolese people. You also have a lot of development of systems in tracking and tracing battery materials, including the cobalt then. They are becoming much more used, these kind of systems, so you can really trace exactly which mine and refinery have been touching this, the cobalt they are using. But to answer your question in short, I think the OEMs tackle the cobalt sustainability topic in different ways.
Hanna, as we wrap up, is there anything you and your team are looking for or concerned about in the battery metals market as we enter 2023?
Well, I would say first from a European perspective, it's of course very interesting to see the European responses to the US Inflation Reduction Act. So political decisions will play a big role in the supply chains. I also think that one thing we have to keep in mind that, especially for lithium, where a lot of this future supply will have to come from juniors, and we are now in a situation with a very challenging financial market, that could have a really big effect on this new mine supply and also on the battery producer, the startups in the battery producer market.
So in your mind, supply continues to be the #1 concern going forward?
Definitely.
Well, Hanna, that was an amazing discussion, and I want to thank you very much for joining us today all the way from Stockholm. Thank you.
Thank you.
Hi, Trevor. Thank you very much for joining us today. How are things in Sudbury?
Things are great in Sudbury. A lot of excitement, in particular in Northern Ontario these days, concerning the prospect of the future around energy transition and movement. So, given Nickeltown, we're having lots of fun here with Frontier Lithium being headquartered out of the north.
Trevor, Frontier's project is called the PAC Lithium Project, and it's situated in Northern Ontario. You recently published an updated resource on the PAC project in 2022, and I want to review it so we get a sense of the economics behind this project. Can you just provide a brief overview of the net present value, the internal rate of return, and also the mine life?
Sure. 26-year project life. In US dollars, $1 billion NPV. It's a 21% internal rate of return. Fundamental parameter to base those economics around would be carrying lithium hydroxide or lithium chemical price of about $13,500 US. And $750 a ton for spodumene concentrate. So the excitement is, when we plug in roughly $20,000 per ton chemical, there's a rough 2-time multiple on that net present value. Pretty excited given the fact that there's current spot pricing for chemicals between $70,000 and $80,000 a ton US. So pretty robust project located in northwestern Ontario. The whole premise of the project is mine, mill, downstream chemical plant to produce premium lithium chemicals, obviously to feed the battery and EV supply chain, really in the Great Lakes region. So that's the vision for the company.
And I should have brought this up earlier, but the feasibility is based on 2 deposits, the PAC deposit and the Spark deposit. Can you just provide a brief overview of these 2 deposits?
Sure. On our project, there's been 4 discoveries to date, 2 of which are the deposits that you referenced. They're both outcropped at surface. They're located roughly 2 kilometers from each other. We've received a mining lease from the Ontario government that was took about 4.5 years. That was a 4.5 year process to receive that mining lease. So really tremendous opportunity having the two deposits being so close to each other. They combined make up North America's highest grade lithium resource that's currently just over 1.5% lithium oxide. There are 42 million tons in total, roughly 2/3 of that still under the inferred category. The balance under measured and indicated. We had a really extensive program on our project this year. Up until 2022, roughly 14,000 meters of drilling was conducted on that resource. In 2022, about 16,000 meters drilled, or a 2x over previous expenditure. So 2022 is a very exciting year for the company. And not only did we see much success on that drilling that focused on the Spark deposit, the 32 of the 42 million tons, we raised the level of confidence, but we also realized an increase in size. So we're excited about that growth. Both deposits remain open in all directions, so the ability to continue to increase in size is very high. We also have some other showings of pegmatite, the host rock for our spodumene, on our project in between those two deposits. So really exciting project here in the northwest of Ontario.
Trevor, you made mention of the fact that the average grade is, did you say 1.5%?
Yeah, just over 1.5% lithium oxide grade. That's
And
the highest grade in North America.
And I'm curious, how does that compare to other spodumene deposits throughout the world?
Yeah, globally, I'd say from resources that appear to have economic grade and size, the mean is roughly around 1.1 to 1% lithium oxide grade. So effectively 50% higher than global peers on average.
Now, another important element for spodumene deposits is low impurities. Can you just touch on the importance of low impurities and how this impacts the economics? And maybe you can just touch on what it is at the PAC deposit.
Yeah. So great that you started off with grade. Grade is king. We like to call width, or the width of an ore body, queen. Many don't reference the widths of the average size ore body because many of them are very narrow. So width is best represented by stripping ratios. So we're really fortunate here on the PAC project under the PEA to have the lowest stripping ratio as well in North America. That's really important because it really is a key driver into and a constraint to consider when asking your question around impurity levels. Impurities can be classified or looked at through two ways. Number one, the amount of impurities that are carried through host rock, or rock that the ore that the spodumene is carried in contact with, that naturally needs to be removed as much as possible before it undergoes any processing. So when you have a larger width, basically it reduces the amount of interface or contact between deleterious materials that could really cause problems in processing and ultimately put your product out of spec. The second and really important factor when we consider impurity levels is in the actual spodumene itself. iron is a key proxy that's carried by many deleterious impurities that could be inside the actual crystal where the lithium resides. So we're really fortunate here on our project, and this is a newly emerging lithium district for North America that boasts the lowest iron levels, not only in the concentrates that we're producing, but also in the actual lattice of the spodumene, meaning it's really high quality minerals. So when you consider those two things, we have the ability to produce really high quality chemicals in the future to feed the marketplace with.
The two notable characteristics of the PAC deposit are grade and scale. We've already discussed grade in great detail, and now I want to touch a little bit on scale. You mentioned already that it's opened in all directions, so that's a good segue into your exploration program. You have 41 million tons, and I want to determine how you're going to grow that in the coming years. Maybe you can just touch on your exploration program that was done in 2022, and then touch on what you're going to do in 2023.
So we really have a lot of excitement taking place in the company. 2022 that really was on the heels of a PEA, preliminary economic assessments, the previous year. So we realized that we needed to increase the level of confidence, and primary objective for 2022 was diamond drilling, and the focus was on the low-hanging fruit on the project and conversion from inferred to measured and indicated on the larger Spark resource. So that's by all measures was tremendously successful for the company. 2023 is really about the next development steps. So we have a clear strategy in the company to have a dual approach to both continue to show scale in the project and continue to increase the size of the resource, while we're also moving in through further feasibility work. The overall exploration target on the project, in fact, we believe we have strong potential to see or realize a 100 million ton resource at surface that could be open pit material. We will continue to work towards that again while we advance. So what we really did get accomplished was that we essentially have found that critical mass to support the development and construction for a mining project. So that's really exciting, and we're thrilled to be in a position with such great widths to be really efficient to continue to show that scale and continue to invest and progress and advance feasibility work in line with baseline environmental and all the other programs and technical studies are required for permitting and construction and build out of the PAC Lithium project into a mine.
And just to clarify, there's two deposits, and together they added up to 41 million tons, but you can see it being as large as 100 million tons?
Yeah, that's correct. We see strong potential. That's our exploration target. We're really fortunate now that we've had so much success on the project from discovery to the realization that everything that we see at surface projects at depth. And in the case of the PAC deposit, we've tested down roughly 300 meters from surface. Spark deposit now through drilling that took place in 2022 down where we're at depths of 400 meters from surface. And we can comment that the grade thicknesses are persisting with depth, meaning the amount of lithium over amount of intersection that's drilled remains, and it does not diminish with depth. So that's really tremendous. So when we look at a pack of 10 million tons, we see long-term possibility for 20 million tons there. Spark currently at 32 million tons. We believe that that can be doubled in size to 60. And when we look at bolts showing in between the two deposits, we see the potential there for another possible 20 million tons to add to resource potential. So that puts us in around that 100 million mark. So if that is accomplished, that would definitely set us likely top in size from a hard rock perspective for lithium on the continent, and rank very favorably with global peers.
Trevor, you mentioned earlier that the space between the two main deposits is approximately 2 kilometers. Is there any way that you can connect these two deposits so it's just one massive deposit, or is it still too early to tell?
That's a great question, and what we can say is that there's strong evidence to suggest that they are connected. We see a structural feature, so essentially two deposits lie on the same structure. They're close in proximity. We're really fortunate in between the two is a 600-meter long showing the bolt pegmatite that has shown widths of around up to 50 meters wide and plus 600-meter long showing there. So that roughly eats up, a third of that distance between the two deposits. We have not drilled in between the two deposits, so that's a really exciting prospect. We look forward in 2023 to end off on one of your earlier questions to assess the potential that is at Bolt. But when we look at the composition and grade of the initial channel samples that have been put in at the Bolt pegmatite, looks very similar to the Spark material. So again, there's lots of correlation there on the same structure. By all means, they suggest that there's strong potential that they're connected in one way, shape, or form. Especially when we think about these pegmatites, they're really like an igneous ore body or a melting system that comes up. So unlike alteration zones where you may have fluids, some containing sulfide bearing gold, for example, in areas, some not. This type of emplacement of ore is a little more predictable. So we're really, really excited about this prospect, and again, strong evidence to suggest they're connected in one way, shape, or form.
And Trevor, when will your 2023 drilling program commence, and how many rigs will you have on site?
Yeah, imminently. So really excited for 2023. In 2022, we had 2 drill rigs turning. There'll remain to be 2 drill rigs on the project throughout 2023. We'll see a combination of both engineering holes required for advancing feasibility. Things such as geotechnical drilling and hydrogeology work for nested wells, all the things necessary for proper design for future mining operation, and as well drilling for a little bit further infill drilling where there's a few gaps that have been realized, as well primary objective of some step out drilling to further increase total resource size. and to work towards that objective of the exploration target of roughly 100 million tons on the project.
Trevor, I want to move on now and discuss your balance sheet. In late 2022, you did a small raise. Maybe you can just tell us how much you ended up raising and what the proceeds will be for.
Yeah, there's we raised roughly $23 million. There's $32 million in the till currently. Those monies and use the proceeds primarily to deliver, continue to deliver feasibility work, finalization of pre-feasibility, and also to work towards definitive feasibility phase 1. So we've broken out, we'll highlight feasibility as stage process, phase 1 being mine, mill, and production of spodumene concentrates. Further phase 2 to scale production of spodumene concentrates and feed downstream chemical plant. So not only to finance DFS phase 1, but also essential programs such as construction, procurement and construction of a planned demonstration plant to produce lithium chemicals. So really those, as well as general G&A expenditures are main use of proceeds for the monies that we currently have. So we're strongly financed for a really robust and exciting 2023.
Trevor, I was interested to see that the lead underwriters were RBC and Goldman Sachs, and I thought that was surprising given how small this deal was and therefore how small the economics were. Maybe you can give us some color as to what their motivation was for participating or leading this deal.
I really think that it speaks to the importance and strategic nature of our resource. This is coming at a time as well where we're seeing the Canadian government force divestments from any Chinese central government related companies that are invested in strategic or any critical mineral resources in Canada. So, you know, this is a converging time, and this industry really is at its infancy and beginning steps. So, so I think it really speaks to the importance of our project. So we're really fortunate to have both advisory and strong support from both Royal Bank and of Canada and Goldman Sachs.
A trend we're seeing in recent years are OEMs entering into equity agreements with producers to secure supply. Are you speaking with many OEMs?
Yeah, we're, you know, I like to describe that as we're in a process right now of communicating, and we are under lots of non-disclosure agreements. So I've got to be careful and not get too granular here with my comments. But you know, we're talking to everyone from incumbent lithium suppliers right through to auto OEMs. You know, it's a tremendous opportunity to receive project support. So to really tie offtake into receiving much needed support, you know, whether it's things through prepaid or equity type loans as well. So what's important for someone, a group like ourselves with a real strong asset, which I reference as a tier 1 resource in a tier 1 jurisdiction, is one step at a time. Pre-feasibility is a significant milestone. So, you know, once we have that completed, we'll look to accelerate or advance our conversations beyond the exploration stage to ultimately, you know, who could make potential partners, who could be best served strategically with future output of chemicals from Frontier Lithium. You know, the world's looking to deglobalize and really decouple from East Asian markets, in particular China's dominance around production of chemicals. So that plays very well into Frontier Lithium's hand, given the strategic location that we have such a high quality asset located in. So really excited about the potential that we have, and we've got to be smart about this. So we're going one step at a time here as we advance the project.
Trevor, as we wrap up, can you summarize what investors can expect in terms of news flow from Frontier Lithium through 2023?
Again, very exciting year ahead. Well cashed up to really accomplish a few things. Primary objectives now are to continue with some infill drilling, help advance the feasibility, deliver pre-feasibility, and also bite of DFS phase one, which would be mine and mill. As well, we are early stages of planning and engineering for a demonstration chemical plant. So it's an essential program to support future DFS phase two. So we'll have lots of activities and lots of news surrounding that development. And one that you touched upon earlier is continuing to show scale on the project. Under PEA, for example, in 2021, roughly about a 25-year project life. So, you know, showing scalability allows, especially during such a supply crunch that OEMs are facing, the ability to scale, provide more materials, much needed materials in the Great Lakes region, based on the plans that have been outlaid by OEMs, as well the ability to show long life sustainability for the benefits of building local supply chain. So this is really about showing the anchor resource qualities of the PAC Lithium project and going through the proper steps of advancing feasibility. So in total, you know, we've got quite a healthy expenditure planned for 2023, and we're well cashed up to do that. So a lot of excitement with shareholders. I can tell you lots of excitements from industry and all the various conversations that we're having surrounding our project and the prospect of being an anchor resource to supply much needed chemicals in the Great Lakes region.
Well, it sounds like it's going to be an exciting year at Frontier Lithium, and I want to thank you very much for spending time with us today and sharing the story. Once again, thank you.
Thanks very much. It was a lot of fun, and look forward to speaking again and keeping the dialogue going around the progress that we're making. Sure appreciate it.
Hi, Blake. Thank you very much for joining us today. How are things in Toronto?
Hey, James. Great. Happy New Year to you, and everything's great. Thank you very much.
Blake, Lithium Ionic is a relatively new company. Provide us with a little bit of background on the company, its formation, and when it went public.
Sure. So we went public in May of 22. So we're a fairly young company. We're still growing, and that's a big part of what we're doing now is trying to get the name out there and talk about it. Started at a 70-cent valuation, so we had a good run since then. Now up in the 160, 170 range and beyond. Yeah, we're really active on the ground. Last year, I think, was really kind of ramping the story up and getting our boots on the ground and moving things forward. Whereas, this year, I think we're going to be really, really active, move things very quickly and be very newsy.
Blake, we often hear about Chile and Argentina and the production of lithium, but not Brazil. Maybe you can provide us with a little bit of background on Brazil and the lithium industry there and how the government has been responding to this new industry.
Yeah, I think it's a great point. We see, the lithium triangle has been so important for so long in South America. Obviously, brine hosted and focus, and now with new batteries and the focus on hydroxide, and with spodumene being, able to be processed directly into hydroxide and high quality material for the new batteries, hard rock lithium has become extremely important, and this is where the East Brazilian pegmatite belt is growing into being one of the most important lithium jurisdictions in the world. And now it brings Brazil into focus, and then companies like a Sigma that have grown rapidly, Latin Resources, which is still underway, and a company like CBL that's been producing for 30 years, are starting to highlight this belt, a unique geological belt and unique production belt. And certainly we're going to be a big part of that too.
And how is the government being, both on a federal level and also a state level? Are they progressive in their involvement within the lithium sector? Are they providing much in the way of incentives for foreign investment?
Yeah, I think we've seen the country be extremely supportive of this. The state has generally been a pro-mining state in Minas Gerais for a very long time, over 100 years, and where some of the most important mines in South America have come from. But, I think there's a global green initiative here that this fits into. And now the government has recognized that the best way to take advantage of this cycle and certainly see the value it creates is to push the exports of concentrate. So they've removed some of the bureaucracy around shipping from the ports, and they've certainly created some tax incentives to help move projects forward, and of course have allowed for permitting to be rapid, or relatively rapid compared to many other jurisdictions in the world. Again, to catch a cycle that fits into a global initiative to move towards battery supported power.
And as you mentioned, permitting can be a rather laborious activity in Canada and the US. How would it compare to Brazil? How fast? When you say it's a lot more faster, maybe you can quantify that.
Sure. I mean, it's not uncommon. I'm Canadian. Obviously, it's not uncommon for Canadian projects to take 4 or 5 years to go through the permitting process. I think it's something that's not always equated into people's view of projects and the time it's going to take to actually get these things online. Compare that to, say, what our neighbors at Sigma have just completed. It took roughly 6 months.
Blake, you also mentioned that you're very close to a couple of other producers, Sigma and CBL. Maybe you can just give us a sense of how close Lithium Ionic is to those mines.
Yeah, absolutely. So a big part of the reason that this area was interesting in the first place is that one of only 2 producing lithium projects in the country is 500 meters north of us. CBL has been producing for 30 years. They're now doing about 36,000 tons per annum of concentrate. They were much smaller before, about 8,000 tons. And they actually fed a carbonate and hydroxide plant in country, very small, always designed for really grease and ceramics, but great proof of concept there for how these materials will react at a chemical plant, which is extremely important. Of course, something people don't talk about a lot is how materials are going to be handled at a chemical plant and the quality of the material that goes there. They've been able to ramp up, and I think they're going to continue to try to do that. And then of course, we saw Sigma complete construction of their project and now ramping up production. And what they're hoping to achieve is a project, of course, much larger. They're going to start with their Shusha deposit, which is about 4 kilometers north of us. And they're looking to produce over 200,000 tons per annum from that of 1.5% roughly material. And they've got another 55 million tons sitting roughly 2 kilometers south of us as well. So, we are surrounded by really rich deposits. The basin is swarmed by these well mineralized pegmatites. The pegmatites are everywhere. It is really about drilling them off. Again, I think we were talking before this, James, but simple projects are the best projects, and the geology here is not overly complicated. They're pegmatites, intrusions that follow structures. We drill them off, they run high grade lithium, and we define them. That's really where we're at and what they were able to do. And it's great having those things go on around us for sure.
And given that you are close to 2 established mines, I can only assume the infrastructure is already in place and nothing to be concerned of.
No, it's excellent. Paved roads, hydroelectric power, enough power for any concentrate plant that would come online. Again, these are not massive production scenarios compared to other materials that are produced. We are very close to a town called Araswai, which is a town of about 40,000 people, blue collar town, supplying lots of work and labor, and we're very fortunate in that way. Access to port by road, which is of course what Sigma's looking to do as well. So really, it's all you could ask for in a mining jurisdiction.
Blake, I want to move the discussion now toward exploration. You don't have a resource in place yet, but you are working toward one. And so therefore, exploration is very important as you work to grow the size of the deposit and ultimately the resource. Maybe you can just touch on how many rigs you have going and what are the targets?
Yeah, so we have 5 rigs on the go now, and we've been ramping up with a new drill company that actually is drilling much quicker than what we had initially started with. That's helping us achieve our goals much quicker. We're still on pace for a Q1 resource. We're aiming for 15 to 20 million tons. We think that puts us in a project scale with serious economic value. We look at something like phase 1 of Sigma's Shusha. This is a deposit that's about 17 to 20 million tons. Looking to produce over 200,000 tons per annum from that at 1.5%. And they've done some preliminary economics on that show heavily discounted spodumene price of $1,900 a ton, representing a project of nearly $2 billion NPV, post-tax NPV, and over 400% post-tax IRR. So what do we want to do? We want to put out a resource that could support economics like that, scope that, permit that, something to that scale, helps move permits forward quicker, and then we'll continue to come in behind with a resource that will continue to grow and expand, not dissimilar to what they did as well. We think we have a belt that's going to outline millions and millions and millions of tons, but we want to catch the cycle now with what we've been able to drill so far.
And given that you have 5 rigs working, you must have a lot of drill results, and maybe you can just provide some or touch on some of the results that you achieved in 2022.
Sure. I mean, we've been focusing primarily on an area called Bandera. It was formerly called Area 1. If you go back to the news releases, we have another 6, well, now more like 8 areas that we think are very interesting and well endowed with pegmatites, but so far, that was the area we're drilling, obviously trying to move that resource forward as quickly as possible. And in this area, it's characterized almost identical to what CBL sees at their production site. Essentially, you get repeated and stacked pegmatites that run sort of 5 to 10 meter widths, and you can get into blowout zones that are larger. And you get 1.5 to 2% grades of lithium dioxide, which is extremely high grade, as I'm sure you and a lot of your listeners know. And so down a hole of, let's say 100, 150 meters, you'll see 3, 4, 5 mineralized zones down that hole. So in this area, it's more swarmed. In an area like Galvani, we saw something wider, We're still doing work on that to figure out exactly what's going on, but here we were seeing 25 to 40 meter widths of 1.5 to 2%. But we got to do more work on the geology there to understand exactly what's going on. And we think Bandera represents an area where we can grow resource quickly. It's located extremely well between, Sigma's Barrero deposit, which is 20 million tons, and CBL's production just to the north. And then coming into the rest of the year, of course, we're going to test some of our other showings as well, which we're very confident we're going to open up even more resources and even more opportunity in a prolific belt.
And how do those grades compare to what Sigma has?
They're virtually identical. The whole area essentially runs that 1.5% type average grade. It's very much what they would be able to show. So far, what we've seen from any metallurgy has responded as well or better than what's been published from them and CBL. CBL sees the same grades. We're really in an area that is extremely well mineralized with lots of exploration upside.
And you mentioned that you would like to get the resource to 15 to 20 million tons and then release the resource. And then once you do that, what would be the next steps?
We're already working closely with our consultants to scope something around that, see what the engineering would look like, what the mining might look like. Ultimately, we want to scope it as quickly as possible because the last phase of what we're going to look at for permitting, when we start the conversations and communications and get the detailed engineering out, will help with the permitting process. So we want to be in a place where as we put that resource out, we've already been engineering along with that. We can put out something very quickly that scopes it well and then permit behind it so that we can try to complete all those things in 2023.
Blake, I want to move the discussion now toward your balance sheet. Cash is the lifeblood of any exploration company. How much cash do you have on hand and how will you allocate that in 2023?
Yeah, we have roughly $30 million of cash in the bank. We were fortunate to be able to complete a raise last year in October. We brought in about $25 million at that point. Our burn rate is modest, something around $1 million a month. Even with the land acquisition work we did last year and what we're doing into this year, we think we have lots of runway to complete, an additional 40,000 meter drill program, do more land acquisition as we want to be very active in the area and really become one of the largest companies in the area. And execute all the engineering and permitting we need to do. So we think we have the capital to get through this year and accomplish all our goals.
And you mentioned that you did the raise in October of 2022. You also went public in 2022. And I'm curious if you can give us some color. Who are the participants on both the IPO and also the equity raise? Are the Canadians, Americans, Europeans?
Yeah, there's a little bit of a mix. It's primarily Canadian institutional coverage, though, that's come into the name and really been supportive. And that's really basically because we have been a small Canadian company from the beginning. And the last few months have been about telling this story to even a broader reach. Of course, these stories are extremely interesting in places like Australia, Europe, and USA, depending on where they think your path is going to be. And depending on how they think you might fit into their, plans for supply chain as well. So I think, in this year and certainly as we move forward, the story will grow, the company grows, and we'll probably start to see more participation from groups outside of Canada. Although we have a really good, strong Canadian institutional base.
I want to move on now and move the discussion toward proof of concept. This isn't a presentation on Sigma, but I think it's important to highlight the success and also the economics of the Sigma project, given lithium Ionic is so close. When did Sigma start exploring and when did they start producing?
Yeah, it's funny. I always try to make our presentation not a Sigma presentation, but it's very hard not to, at least reference some of the work they've done. And of course, I think, to your point, they really started advancing exploration in 2018, and now fully constructed and moving into production through 2022 into 2023 here. I just think that's an incredible story. They've done a great job, and they've certainly also created a ton of value for the people who bought in this story. It really, you know, the reason it's hard for me not to point to it is that a lot of what we're going to try to do is the same, you know, except we're going to try to move a project forward as quickly as humanly possible in a very unique jurisdiction, permit it quickly, scope it quickly, and move towards that construction. And they've just done a good job of that. And I think that the value that has created for us is any project that is starting out, and everybody knows this with the exploration space, is the questions become, you know, can you define something in that belt? You know, do you have the support of the government? Do you have social licenses? Are there environmental issues or First Nations or indigenous issues you can't get around? Or, you know, can you get a permit? Where are you going to offtake to? Who's going to buy this? What are the next steps? You know, they're answering and have answered all those questions for us over the last 3 years. And like I said, did it in a very tough environment. You know, you combine that with a project that's been able to successfully produce for 30 years to the north of us, albeit small. Now you answer the other questions, you know, metallurgically, how does this thing behave? You know, what's it going to behave like at a chemical plant? What kind of product can you actually produce? You know, what kind of grade can you actually come up with, or con grade can you actually come up with? So a lot of the risk that junior companies take on really have been mitigated by where we are and the proof of concept around us. And it just becomes, you know, a project for us to just deliver. You know, we just have to deliver on drilling off these things, showing the scale, showing the growth, engineering them properly, and then, you know, really trying not to mess up is all we have to do now.
And given that the market cap of Lithium Ionic is around 200 million and Sigma's is around 4 billion, there's lots of room for upside for Lithium Ionic.
Yeah, I mean, in a lot of ways, that's the story, right? I think Sigma's done extremely well. I think there's probably some room for people to continue to do well. They have a great story and a great name. But if you're looking for that real leverage and torque, you know, it's the same story or similar story coming in behind it with that kind of room for growth. So I think, you know, that's really what, you know, my job has been, is to try to show people that we are coming in behind, and that's the kind of growth potential and upside you're looking at on a project like this. And it moves very, very quickly. You know, it can get there very, very quickly.
And one other point before we wrap it up, Blake, but a lot of Australian companies have moved into Ontario and Quebec and set up exploration companies. Have we seen that yet in Brazil?
Yeah, we just haven't yet, and I don't think it's something that we won't see. I think that this is an analog to Western Australia. I mean, this is something they understand very well. Like it's an Australian company that really has engineered and designed the Sigma plant and is currently working on you know, this belt in great detail. So I do think they're going to see that, you know, themselves in this space, or we're going to see them in this space, I should say. We haven't seen it yet. We probably will. Certainly the Chinese have been far more aggressive on trying to be a part of this belt, and they are aggressive everywhere. But I think maybe for the Australian you know, investment community, that they've gone to jurisdictions they know well and that they've been successful in previously, and it'll, you know, they'll soon turn their eyes to this area.
Blake, as we wrap up, can you summarize what investors can expect in terms of news flow from Lithium Ionic throughout 2023?
Absolutely. We're going to be newsy. I think we were fairly newsy in 2022. We think that's important. We've seen a lot of drill results. We saw a lot of drill results in 2022. We saw met results. We saw land acquisitions. I expect to see the same and more in 2020, or this year in 2023. And again, resource engineering, scoping, moving through permit, you know, really expect to be in a position in 2024 that you and I are sitting down, you know, around this time and talking about some huge milestones from the company, maybe some new partnerships and paths forward on how to construct, build, and ultimately have represented a great deal of growth for the investor base and the company as well. So should be a really huge year. 2022 was successful, but 2023 I think can be a lot better.
Well, it sounds like you and your team are going to be very busy throughout 2023. That was a great introduction, a great overview of Lithium Ionic, and I want to thank you for being with us today, and we look forward to the upcoming resource in the near future. Once again, thank you.
Thanks for the time.
right, Joe, thank you very much for joining us today. How are things in Charlotte?
Things in Charlotte are warming up.
Joe, the lithium price is showing no signs of abating. It was up over 140% in 2022, and I get the sense that it will continue into 2023. But before we do that, why don't we just start with a brief overview of your firm, Global Lithium? Where's the firm based and what services do you offer?
I am based in Charlotte, North Carolina. It's an advisory services firm. I deal with clients on 5 continents. We really do whatever the need is. If I'm dealing with a junior lithium producer, it's one thing. If I'm dealing with a government, it's something else. Or if I'm dealing with a purchaser, obviously their needs are all different, and I just try to customize the service to the need.
So you're also the host of the Global Lithium podcast. I'm a listener of that, by the way. But how often do you do interviews, and where can our listeners find this podcast?
It's on all the major podcast services, whether it's Apple Podcasts, Spotify. Occasionally I put one out that's only on my website just to drive a little traffic to my website. And those episodes tend to do pretty well. It comes out on average about every 2 weeks.
And you're also very active on Twitter. What's your Twitter account?
At Global Lithium.
So let's move on now and discuss the lithium price. It was up over 400% in 2021, up over 100% in 2022. Where is it going to go in 2023, Joe?
You have to look at price in a couple of different ways. Most people refer to the China spot price because that's gotten all the publicity. Where most of the price changes are going to happen, significant price changes will happen in 2023 is probably on the contract side. They tend to lag spot, and we've seen their rise obviously would be later if you have a formula that has a trailing spot price. And there's also different formulas people use. So we've seen, if you looked at 2022, last year, you would have seen the biggest dispersion of prices that's ever happened. We had $10 contract prices that were still in effect, and we had $80 a kilo spot price. You're going to see convergence in 2023, 2024 as long-term contracts fall off, formulas come into play. I don't think the upward pressure is over on price. I do think that there's some big players in China that are active battery guys who benefit the most from lower lithium prices, are trying to talk the market down. And that, coupled with a recessionary environment for a time, could drive the spot price lower. But the Goldman Sachs of the world, the Morgan Stanleys of the world, who are continually forecasting lithium price dropping off a cliff, are just wrong. And they have a well-developed track record of being wrong now.
And I'm glad you brought up Goldman Sachs and Morgan Stanley. Morgan Stanley has said the long-term price will be below the marginal cost to produce. What do they have wrong, or what do they see differently than what you see?
What I don't think they've internalized, even now covering it for years, is that it takes about 2 years to build a big battery factory. It takes about 10 years to do a greenfield lithium project on average. Hard rock can be faster than that, but you also have to look at the vertical integration. And it's just, the track record is supply, it takes a long time. And now you've got a situation where you're going to have a 10-fold increase in lithium demand, at least between 2020 and 2030. Nobody disputes that. Actually, my demand numbers are lower than most banks. Where the banks get it wrong is they have young analysts who read DFS, definitive feasibility studies, and believe them. And that's the biggest mistake you can make, is not factoring in that those are very optimistic, generally speaking, and the timing. Canaccord has a great graphic they do, and I think the headline is all lithium projects are late, and I think they can say that it's true. And if anybody has access to their work, take a look at that, because it really shows. DFS will say it's going to be in June of 2020, and it winds up being April of 23. That's a significant difference when you're talking about big increments of capacity coming online.
So you touched on demand, and a big driver of demand are EVs. And we've seen a huge growth in the adoption of EVs here in the last couple of years. But many countries, including the UK, Germany, and Belgium, they've all said they want to ban the sale of new gas cars by 2030. The Biden administration has said that they would like to see 50% of all car sales be electric by 2030. Is this possible given the current production levels of lithium?
I would say no. And there's some facts to back me up. If you look at having 50% EV penetration in the United States, of course, you can make your estimate on whether the car market's going to increase or decline over that time with car sharing and some of the things people talk about in the future. But let's look at where it is today in the shortage that just really tepid EV penetration has caused. We're in a structural lithium shortage now with EV penetration. When I talk EVs, I talk pure EVs. I don't throw hybrids in. It's well under 10% in the United States. It actually is. This year will be over 5. But when you're talking about being in 2023 and moving to 50% in 2030 in a country that produces less than 1% of the lithium. When I started in this business, US production was a significant part of global supply. Now it is very hard to get a project permitted, and that's the big disconnect in the US. And I would say probably you could say North America as well, that not enough's being done to invest in the resources. The US government's throwing out a lot of money for downstream capital, but it doesn't do you much good to build a huge battery factory if there's no battery metals to support it. That seems obvious, but when you start looking at what's really happening, it will become obvious, I believe, in 2023 that something's got to give on the resource side. And permitting has to be streamlined in North America, or there's going to be a huge disconnect in the numbers people want to see, and the pronouncements that we're not going to. Some car makers say we're not going to sell ICEs. Some governments saying we're not going to allow ICEs to be sold. I think those will be cans that get kicked down the road unless something happens in 2023.
So we're going to have a bunch of gigafactories just sitting there idle?
Yeah, well, you do now in China. I mean, China, but that's typical in China. China will build capacity. I lived in China for 5 years. I spent a lot of time driving through cities that had block after block of apartment buildings with no lights on at night because they were just shells. That hasn't happened in the US up until now because we haven't done that much as far as putting battery capacity in when you take Tesla out of it. But there are a lot of plans, and there's a lot of money now being loaned at low interest rates or somehow subsidized to build battery capacity in the United States. And again, where is the raw material going to come from? The Biden administration likes to say, well, we'll buy it from our friends. But if you go to the countries where our friends are, the Chinese have already bought a lot of that capacity.
I want to move the discussion toward M&A. We've seen some M&A activity here in the last couple of years. Late in 2022, Lithium Americas acquired Arena Minerals. That deal still hasn't closed yet, but BHP also acquired Oz Minerals, and Rio Tinto has also said that they want to get involved in lithium. Do you think M&A will continue into 2023, or have valuations gotten too high?
Well, I think valuations are high, but they've come down recently, like everything else has in the market. I do believe you will see a major energy company make an acquisition. I don't know if it'll happen in 23 or maybe 24. but I can tell you they're all looking. You've seen Koch Industries invest in a couple of lithium projects. They're not an energy company per se, but they're a $100 billion company that has put investment across the battery spectrum, whether it's recycling or upstream and into DLE technology. I think you'll see what you would have called one of the seven sisters, if you're familiar with the old oil days, which is where I started my career. I think you will see one of them get in the game, and obviously they have the balance sheets to take out any. There are no large lithium companies.
So I want to move the conversation now toward Canada. You mentioned earlier that the only way the U.S. is going to meet its goals is by acquiring lithium and other battery metals from its friends, and Canada is one of those friends. But currently, Canada does not produce any lithium, but that will change when Sayona Mining starts producing sometime here in Q1. The Australians have been coming to Canada here in mass. Ken Brinson, the former CEO of Pilbara, is heading up Patriot Battery Metals. Luke Cox is running Green Technology Metals. Chris Evans is running Winsome Resources, just to name a few. Do you think this speaks to the quality and the potential of lithium resources in Ontario and Quebec?
I think it speaks to the fact that everybody realizes now Western Australia can't supply the world in a 50% EV penetration environment. Western Australia has done a great job of backstopping the failure of South American brine to ramp up quickly.
And to continue on with this point, do you think the Australians will be able to kickstart the lithium industry in Canada? So instead of just having one producer, we have two or three?
Oh, I think you'll have a number of, if you look out 5 years. I mean, Allchem, another Australian company, also has an asset at James Bay. So you've got two of the best. Ken Brinsden did a magnificent job with Pilbara. Nobody knows the hard rock world better than Cam Henry and Primero, who are involved with Green Technology Metals. I think the fact that they're now turning their sights on Canada is just indicative that the money's going to be there because of the programs in the United States and some in Canada as well to support programs. And that was if you go back 5 years, the biggest issue when I did presentations around the world was you couldn't get a lithium project financed. That is no longer the case. Good projects, there's going to be money there. Let's just see if the permitting processes are fast enough to keep up with what the Aussies that are involved now in Canada, how fast they want to move.
Yeah, that's a very good point, because that's the one thing that always gets in the way is the permitting process. I want to move on now and discuss a recent trip you did to Australia. You met with many producers, developers, and explorers when you were there. What were the biggest takeaways from that trip?
Well, I think that Australia is still going to grow, and it's going to grow rapidly. And there are dozens of projects out there. You've got, I always like to plug Global Lithium Resources because they copied my name, and they've got a talented MD down there, Ron Mitchell, who worked for Tanchi and Taliesin for years. I see Australia continuing to grow, but I also see Aussies going out, whether it's Canada or South America. There is hard rock in South America. You're going to see Sigma start production this year, and Latin Resources just got Peter Oliver on their board, and Peter ran the biggest lithium mine in the world for over a decade, Greenbushes. So you have people that understand what it takes to get things done. If you go back to Nemaska was run by a lawyer. And after a decade of futility, it showed. Maybe we'll see that asset Whabouchi produce now that Livent's involved with a government entity in Quebec.
I'm curious, when you travel the world, you're meeting with many different clients, many investors. What's your sense? Is there still a lot of people not involved in this trade in spite of the moves that we've seen here in the last couple of years in the lithium price and also the producers and developers?
Yeah, I think if you look at, there's such skepticism about lithium stocks, and there always will be, I think, until it's truly a mature industry. And you have to keep in mind that the entire global market for lithium chemicals didn't reach $1 billion until 2015. That is a incredible statistic that people, fail to internalize. You have a number of, I would say, quality companies, but when the lithium price, if you just take the BMX auction that Pilbara does on spodumene, and that's, if we go back 2 years or go back to 2020, and it was June, I had Ken Brinsden on my podcast, and it was the very darkest of dark times in WA for the new producers. They were getting about $350 a ton for their spodumene. The last BMX was still over 8,000, admittedly for a small quantity, but it was slightly lower than the one before, and the stocks all got hammered. But if you started doing the analysis on the profits, if you just look at the change in Pilbara's balance sheet in a year, you have to wonder what people are thinking. And I think it's still, a lot of people still don't believe that we've hit the hockey stick in EV demand. There's still, I think, a lot of cynicism out there about where this is going. And I've been involved in this since it started, and I was slow to, I've looked at false starts in EV demand in 2008 with the Leaf and Obama's pronouncement that he'd get 1 million EVs sold in his first term. That didn't happen. Tesla was a darling, and then, they've had issues. Now everybody looks at them like my area where I live, I call it Model 3ville now. And if you go back a couple of years, you couldn't find Tesla anywhere near where I live. So, we've seen those changes, but I still think lithium, because lithium price is hard to predict, you can't hedge it. There's not an effective financial instrument in the industry. I think that that's hurt as well.
So in spite of the move that we've seen in the last couple of years, you're still very bullish on the lithium sector and also the lithium price.
Well, you don't have to have anywhere near the current prices for a project in Canada to be very, very attractive. What we have now, though, is because China is often thought of as, leading the lithium industry. That's a myth, because they have the worst assets of any of the major countries that are trying to produce lithium. China doesn't dominate lithium resources. They have low quality hard rock and they have low quality brine. So they have to go outside to do what they need to do. And a place like Canada now, you've got a lot of good hard rock assets, and you've got a pricing situation where what China has to do to stay in the game is develop a hard rock called lepidolite. If they bring 100,000 or 150,000 tons on in the next few years, good for them, but that just ensures profit because they'll be the high end of the cost curve. And the lithium price is completely disconnected from the cost curve, which is odd in this type of industry. I think it will remain disconnected for several years, but when it comes back to cost curve pricing, lepidolite's going to ensure Canadians can make a lot of money, because if you're dealing with an average of 1% Li2O in a Canadian project or above, and less than 0.3 or 0.29, I think is the last one I heard, percent Li2O in a big project in China. And there's a lot of waste. And if you start talking about ESG, that doesn't pass the ESG test either, the way they have to mine that.
Joe, as we wrap up, you've mentioned you're very positive on the lithium price, but if there was one possible catalyst which might take the price lower in 2023, what would it be?
I think it's fear of recession on one hand and a concerted effort by some of the big buying parties of lithium, the battery guys, particularly in China, who are trying to talk lithium prices down. There's a lot of discussion in the press about the fact that lithium prices have to come down. And you see even the big banks, and these are Western banks, in addition to some of the bigger ones in China, that are in many cases predicting extended shortages, but the price going down by up to 2/3 to 70%, and also forecasting a spodumene price that would make the cost curve much higher than their price. So there's a lot of, I think, bad analysis and just a distrust of what they like to call a commodity. And lithium's still a specialty chemical. But if you want to look at it in the commodity lens, it's always the high prices fix high prices. I believe that's true, but I believe in the case of lithium, it'll take a couple of decades for that to be fully realized.
Well, Joe, that was a very insightful conversation on lithium, and I want to thank you for spending time with us today. I would remind all of our viewers to check out Joe's podcast, the Global Lithium Podcast. I'm a listener and a huge fan, and it provides a wealth of information on anything and everything to do with lithium. Once again, Joe, thank you.
Thank you very much.
Hi, I hope you're enjoying the conference. Just a reminder to subscribe to our channel, Bloor Street Capital. Give us a like and leave a comment. Thanks for your support. Hi, Kunal. Thank you very much for joining us today. How are things in Toronto?
Great. Thanks for having me here, James. Excited to chat about light metal and continue our conversation.
Light Metal is not a miner or a producer of battery metals, but rather a developer of battery components of the next generation of batteries. And I want to start right there. Maybe you can just explain to us what the next generation of EV batteries are and how are they, or how will they be different from current EV batteries?
Yeah, no problem. So next generation batteries can come in a number of flavors. So I think until now, a lot of the work has been done in looking at cathode materials. So the nickel, cobalt, lithium, or iron phosphate. There used to be manganese-based cathodes. How do we change that for performance and also for cost? But what we're starting to see is now for next generation batteries, as you work towards things like solid state, more innovation on the anode side. So there's groups looking at silicon anodes, lithium metal anodes, which we're doing with liquid electrolytes or with solid electrolytes. And so the next generation of anodes really facilitate new types of batteries that can either be safer, cheaper, higher performing, or use new materials. So there's even pathways to using lithium with sulfur that can also vastly reduce the cost of batteries.
So currently the anode is made of graphite, but a lithium metal battery, the anode is made of lithium, which will make the battery much more powerful, but also cheaper. So if I understand you correctly, the two primary benefits of using lithium metal are in the anode are performance, and because of the higher performance, it will also reduce the cost of the battery. Is that correct?
Correct. So with the lithium metal anode, you're able to eliminate the graphite and also improve the energy density, since you already have lithium present on the anode side. And so by producing higher energy density, now you can either for the same, say, range of the vehicle, reduce your dependence or reduce your material intensity of nickel and cobalt. So that's where potential cost savings come into play over time. But also, as I mentioned in the first comment, lithium metal anodes also facilitate new technologies like a lithium sulfur, where you're actually getting rid of the nickel and cobalt as well. So it unlocks a lot of different opportunities and options for the future.
And who will be the ultimate end user of this product, or who would be the buyer of this product?
Yeah, so our anode technology would be sold into anybody making batteries, whether that's a battery company or, as we see, automotive OEMs, for example, taking more active role in their battery production. And so they would be also potential customers or users of either the technology or the end product that we produce.
And what other companies are involved in the development of next generation batteries?
So there are a number of companies, predominantly actually in North America. We see, I guess, twofold. One is more startups that have emerged and been working on this for a few years, and of course, larger companies investing their capital in this. So, to give you some names, I mean, one which we had publicly announced we work with is Blue Solutions, which is actually the first commercial producer of solid-state batteries, primarily used in bus applications. But then there's a number of companies like Cuberg, which is actually owned by Northvolt, Factorial Energy, SVS. So there's a group, as I said, primarily here in North America. I would imagine also the traditional groups are also looking at new technologies. We've seen CATL announce a sodium-ion battery, for example. So it's a pretty broad spectrum of groups working on this topic.
And you mentioned earlier that Li-Metal's focus will be on the anode, replacing the graphite with lithium metal. Are there other companies trying to do the same thing or a similar thing?
Yeah, so a number of the groups I mentioned want to use lithium metal anodes in their batteries, and everyone has a different strategy in terms of how deep they integrate into that. Our partner Blue Solutions already makes some sort of lithium metal anode, but there's technological challenges we're trying to overcome to produce thinner anodes, essentially, with them and with our other customers. You have groups like SCS that are producing their own anode with their own technology, but there's a number of groups that have focused on cell design and how to make the end cell, and we're looking for partners to produce anode like ourselves.
So I want to get a little bit deeper into this discussion now, because you've already mentioned lithium metal quite a few times, and that's what you're going to replace the graphite with. But how is lithium metal different from lithium carbonate or lithium hydroxide? And those are the, I guess, the terms we hear on a regular basis.
So the lithium carbonate and the lithium hydroxide are chemicals, carbonate, for example, powder form that goes into the cathode side of the battery. Lithium metal is actually, if you imagine just a big block of shiny metal. So it's in its metallic form rather than a more chemical form. And actually, lithium metal is producing it, or our technology can produce it from lithium carbonate. So the traditional actual process in the industry is to take lithium carbonate, produce something called lithium chloride, and then convert it to metal. That process results in a fair amount of chlorine gas as a byproduct. So our innovation in producing the metal, which is one part of our business, is to convert lithium carbonate to metal. So it's a value add step to the lithium carbonate.
And I just want to follow up on that, because Li-Metal will be a vertically integrated strategy. You're going to be producing the lithium metal and then using that metal to create lithium metal anodes. Is this correct?
Correct. So lithium metal right now is used in pharma, different alloys for, say, aircraft, and primary batteries, or little coin cells, the round ones you put in some devices or medical devices. So there's been a pretty small market. There's about 6,000 tons of metal required globally, 90% plus produced in China. Here in North America, there's a small production of metal by Livent. They have a capacity of about 200 tons. So if you really want to scale next generation batteries with these new types of anodes, a significant increase in metal production is required. And as I described, the metal production under the traditional sense would also require scale up of lithium chloride. So by using lithium carbonate, a more commonly produced metal product, we have an advantage in being able to more easily scale up metal production, and also to secure supply for our anode business. It's good to produce our own metals. So there's a great opportunity. I mean, benchmark mineral intelligence predicts we need 20,000 tons by 2030 of battery grade metal. So there's a big gap to fill there in terms of metal production.
So Lime Metal also has a pilot project north of Toronto, and maybe you can just touch on this pilot project and what is exactly happening there.
Yeah, so at our headquarters in Markham, just north of Toronto, we're actually piloting that technology I described to convert lithium carbonate to lithium metal. We're running a series of campaigns to prove out the technology. The good thing, I guess, to state is that that technology, or the unit size we're using, is the same that we would use in a commercial plant. We would just use a number of them in parallel to build a larger plant. So that's a core piece of the business, and we continue to advance that to ensure that we can demonstrate and provide, sample material to customers so they can qualify that material and confirm, its specifications. And so that's what we're doing at the headquarters in Markham.
And you're currently working with the engineering firm Hatch to determine the feasibility or the economics behind developing a larger plant, a more commercial plant. Maybe you can just tell us about that process, and when can we expect the results from this engineering study?
Yeah, so the technical team is working back and forth with the engineering firm to just determine, what are the risks and costs of bringing that into a larger production. I guess the good thing about the metal business is that it's a little bit independent of the anode business, in the sense that we could scale that up sooner and still enter into other markets besides batteries to sell metal, given there's a gap. And so we're parallel processing our piloting and our engineering so that we can be ready and have a set pathway in the course of 23 to when we can take this commercial.
I want to move on now and discuss your partner, Blue Solutions. You touched on this earlier, but you've entered into an agreement with Blue Solutions. Maybe we can just start by who Blue Solutions is. It's a company I'm not familiar with.
Yeah, Blue Solutions, their facility in Quebec. It's also owned by a French conglomerate called Bolloré, and I think they've produced the first commercial solid state battery, and they do have some, it works in buses. However, it has some design challenges, I think, for mass scale. So that's why we're working with them to produce their next generation anode technology that will help them, scale up into other types of vehicles like passenger vehicles. And really, it's our anode technology that helps them unlock that, because it enables very thin anodes. The traditional way to make a lithium anode is roll it and or extrude the lithium, but you have a limitation to how thin you can take that, because it becomes very fragile. Imagine, aluminum foil, and you could just sort of rip it apart very easily, which is not great for a battery. So our anode technology, which is used as a technique called vapor deposition, allows you to basically spray paint, in a sense, lithium onto, say, a copper backing and produce a very thin layer of lithium, which is beneficial to produce their next generation of batteries.
And do you have an exclusive agreement with Blue Solutions? Are you in discussions with other OEMs or battery makers?
Yeah, we're casting a wide net, as there's a number of companies interested in our anode technology and our metal. So we have samples out to 12 or more companies. We're talking to 20 plus and continue to widen the reach here in North America and in Europe to a certain extent. So there's no exclusivity. There's a wide, I guess, demand for these types of anodes.
So we can expect more announcements on partnerships in the future.
Yeah, we'll keep part of our objectives is to continue to expand commercial relations, and then of course if we are successful, we would hope to bring that to the public eye and our investor or shareholder base.
And a trend we're seeing with a lot of lithium producers or even lithium companies that are in the development stage is that they're entering into offtake agreements with OEMs, and typically in return for not only the lithium, but also an equity position in the company. Is this an option available for Lion Metal?
Yeah, we're open to different ways to continue to capitalize the company as we scale up, particularly the metal plant. I think different from where hydroxide and carbonate are, where people are trying to lock in supply for existing technology, the lithium ion technology, I would say companies a little bit further away from locking in their metal supply for the future, but down the road that could definitely be an option. And independent also of the next generation batteries, we see there's opportunity to lock up some of the offtake of a potential commercial plant, given that most people are importing their lithium metal right now.
Kunal, I want to move on now and discuss your balance sheet and your financial needs that will be associated with moving the pilot plant into commercial production. How much cash do you currently have?
Yeah, the last reported we were at about 20 million Canadian. That's good for keeping our R&D programs and development programs going and expanding the team. However, if you want to go build hard assets and commercial facilities, you're going to need additional capital, and so something to think about as we move through 2023 and how to capitalize the business for further development.
Kunal, as we wrap up, can you summarize what investors can expect in terms of news flow from Lion Metals in 2023?
Yeah, no problem, James. I think probably three key things. One is continue our metal development and the engineering study to be commercial ready on the metal side. Two is continue to develop our anode products and qualify them with a variety of customers, and also get that feedback on how to continuously improve the products. And three is then linked to that is really continued commercial traction and establishing more partnerships like we have with Blue Solutions, that we can tell our investors and potential investors of the progress we're making.
Kunal, that was a great overview of Lion Metal and how lithium metal can improve the performance of EV batteries, and I want to thank you for sharing your insights with us today.
Great. Thanks, James. Thanks for having me.
Hi, Corinne. Thank you very much for joining us today. How are things in Florida?
Hi, good morning. Thank you for having me. Everything is good, and Happy New Year to everyone.
Thank you. Corinne, before we do the deep dive on battery metals, why don't we just start with a brief overview of the Clean Tech Group at Deutsche Bank, and what exactly is your role within that group and what sectors do you cover?
Great, yes. So I'm the lead analyst for Deutsche Bank. We cover all the major lithium producer name, and we also have MP Material, which is actually a more like a downstream company like Magnet. And then recently took over and added coverage on renewables, so like solar energy for here in the US. So that's our, I would say, clean tech umbrella for Deutsche Bank in the US.
Corinne, I'm glad you brought up solar stocks. I'm going to bring that up later on in the interview, but right now I just want to focus on the lithium space. And as a research analyst, you spend a great deal of time speaking with producers and analyzing their financials. And so this is where I want to begin our discussion, examining your valuation methodology. How do you value lithium equities, and how is the procedure different from producers versus developers?
Yeah, that's a great question. And obviously from an investor perspective, I think that's the key question. For established producer, I think you want to look at EBITDA, right? And I think the easy metric to look at is EV to EBITDA. And what you will be looking at recently over probably the last 6 months, 9 months, you have seen a multiple compression, right? It's not really a question of the EBITDA compression, because actually EBITDA has been significantly increasing for company like, SQM, Livent, or Albemarle, but it's really much just a question of actually that expansion of EBITDA. So, if we would have talked maybe a year ago, you would probably see company being valued in the tens time. I think now we're in the single digit. And that's, a number of drivers beyond that compression. It's also some macro elements. So think about the demand in China, think about the possible outcome from the reopening from the policy again in China, and then EV and energy storage as well demand, and this is international. For junior producer, I think it's a little bit of a different approach. The valuation are a little bit more rich actually, and I think it's also incorporating the speculation that those projects can come online, and it's kind of I would say almost the market taking a position of if it can come online or not. And then especially if it's US based project, I think the fact that the Inflation Reduction Act was passed back in August of last year, and trying to push new supply in the upstream in the US, I think people want to have that succeed. So a different, I would say, for junior company, if they are not producing yet, the best is to look just kind of like a DCF, so like a discounted cash flow valuation, and then looking at the capital structure, looking at the country risk. I think what you want to try to take into consideration for valuation is your the jurisdiction risk. Is the company operating in the US, or is it in Africa, or is it in South America, where you're going to have a little bit more like a factor to take into consideration. And I think the execution risk, and that's really related to the management team. And I think those kind of like the two group of valuation that you're looking at for lithium those days.
And as you mentioned, 2022 was an extremely difficult year right across every sector, including lithium. And you just highlighted the fact that we saw margin compression as a result. But maybe you can just give us a sense of what happened in 2022 with some of the larger producers in terms of margin compression and what that did to their valuations.
Yeah, and look, actually, I would actually say that 2022 was an exceptional year for lithium, and almost kind of as well a surprise year. When we entered the year, I think most speculation, most thought for the industry would be that the spot price would decrease and come back to like more regular level. People were talking still like 10, 20,000 per ton. It actually went up and it maintained for most of the year and continued to increase. And right now we're even like at 80,000. And I almost feel that 2023 is maybe a repetition of what happened in 2022, because here we are a year later and having kind of the same idea in the same discussion about actually spot price could further increase. It's speculation and it's irrational as well, because nothing much has changed from a demand and supply perspective, but there is the room for this. But what happened in 2022, you haven't seen actually, it's not a margin compression, it is just like a multiple compression. And again, it's just because your market cap remain relatively the same while your EBITDA is expanding. So I think there is that. But most of the major producers have seen their realized lithium pricing, 2 times, 3 times, 4 times higher than what it was in 2021. The same for the EBITDA. So I think it was a very successful year for those. They were able to move most of their contract structure as well to be more, I would say, market indexed. And then you enter into 23 kind of like having a very market exposure for those companies, which, and happy to talk about it a little bit more as well after, but which is also driving some of the fear from investor, given you have most certainly or most likely have reached a high level for spot price right now.
And as you mentioned, the spot lithium price in China is trading anywhere from $70,000 to $80,000 a ton. Long-term contracting with OEMs is anywhere from $40,000 to $60,000 a ton. But many producers and even near-term developers are trading at a steep discount to that spot price. Are underpriced, or the lithium is overpriced?
Well, I think actually just if you look at the, I would say, implied pricing that the valuation gave us, you would see it's very likely, it's hard to totally give a number, but I would say it's probably implied like a 20,000 per ton, 25,000 per ton valuation. I was actually talking to one of the major producers earlier this morning, and we're chatting about that valuation, because when they were getting about 5,000 per ton, 18 months ago, and now they're getting 50,000, so 10x on pricing. The valuation hasn't moved 10x. The valuation has actually only moved 1.5 times or so, or like not even. So there is a large disconnect. Look, I think right now, and especially into first half of 23, I think not a lot of investor, and probably not a lot on the sell side neither, is pricing a spot price that is remaining at this. So I think everyone has a certain discount in their valuation, which I'm pretty bullish on the space, and I do believe that 2023 again could be a repeat of 2022, at least from a producer perspective. So I think there is room actually for more valuation catch up later in the year. I think it will really come down to the health of the demand, and again, it's just come down to China. We might have a 1Q that is a little bit tricky. You have seasonality, you have obviously Chinese New Year. The reopening with COVID cases, I think we have seen it here in the US or the country where the reopening happened in case, increase and give a little bit of that uncertainties before kind of regulating. So when I think once we reach the spring and probably 2Q, I think we might be in for a little bit of surprise there as well for lithium on the positive way.
Interesting. I want to move on now and touch on OEMs. OEMs have been very aggressive in moving upstream in trying to secure lithium supply. GM entered into a 6-year supply agreement with Livent beginning in 2025, and they paid $198 million upfront for a guaranteed lithium supply. And do you think this is going to be a trend that will continue on into 2023 and beyond?
Yeah, I think that's fair to assume. And yeah, I would agree. Not just 23. I think it's probably like in the next few years. Consolidation, I do not think that is likely to happen between lithium producers, because I think it's still actually somehow a fragmented industry. I think only 2 companies were able to significantly merge and be relatively successful. So I think the kind of consolidation is more upstream, midstream, downstream. And it makes sense. I think the OEM have the pressure to get access to the raw material, not only lithium. And the best way to do it in terms of volume and pricing, but as I do believe that still at this day today, volume is overpricing, right? Is to go to the source, right? And that's mean trying to get first dib on the production. So I think it makes sense. I would just say on that as well, it's really just more a partnership, right? At least not a lot of OEM and EV maker have the technical knowledge to develop lithium or any other raw material, but they have the financial means. So I think it makes sense, and keeping, lithium specialists developing the asset in the mine, and just them basically injecting money and getting like a special offtake agreement and very likely a better price that if they had to go on the spot market. So, you mentioned Livent and in the agreement, I think it was one of the first kind for the industry, especially with the prepayment. But that's really show you the commitment that OEM have for lithium and raw material in general.
I want to move on now and just get your sense of investor sentiment. Given the nature of your job, you speak with many institutional investors. Are you getting a lot of interest from long-only funds, pension funds, or hedge funds? Or are investors still not involved in the trade because of valuations, or maybe because they're skeptical of the lithium price and the move we've seen?
Yeah, it's a good question. Look, we always get a lot of interest. I think, especially over the last 2 years, I think the interest has been very constant. It's a mix of investor. We have long onlys, and I think I would say the near term turbulence that we're hearing from maybe more hedge fund does not impact the long only the same way, right? Because they are in for the longer term. I think right now, and that's probably one of the key takeaway from, we recently had our Deutsche Bank Lithium annual lithium conference a month ago. I think one of the biggest disconnects right now is what we hear for corporate and what we hear from investor. I think investors are very cautious. And look, there is probably two or three reasons. The first one is, as I've mentioned a few times, is the demand in China. People fear that the demand and the growth for EVs in China will not be as strong as people were expecting a few months ago. The reopening of COVID, I think you have two camps here. You have camp A that absolutely believe that the demand is going to strongly take off in 2Q or 3Q of this year. And then the rest that are still very uncertain about it. And then obviously the second argument from investor that we hear is the spot price. You mentioned it earlier, it's at 80,000. It has been stable for months. And I think no one would have ever probably believed in it like 6 or 9 months ago. But from investors that come more from like a mining or commodities perspective, you very likely you have reached the top of the cycle, right? Can it go up to 100,000 on some volatility over a few weeks? Actually, I do believe so. It could. But is that going to remain for the next 2 to 3 years at 80,000? Very unlikely. I think what's investor missed here actually is that the prices is not going back to 10,000 or 20,000. But even if prices, let's say, is on average 50,000 or so, I think this is what we're calling for here at Deutsche Bank for next year. This is a very healthy level for lithium producer. And I think EBITDA generation would still be able to be up on a sequential, like year-over-year basis. And I think investors are missing that part. So I think, you have to be selective. You have to look at companies that are diversified, great execution and management team, but I think there is opportunity for lithium. But, I would just say over the next 2 months, I think from an investor perspective, they are just going to be a little bit kind of more on the back burner and kind of looking at how things develop in China right now.
And I'm glad you mentioned that battery supply chain conference that was held in late 2022. I heard great things about that conference, by the way. But just to summarize, corporates are still very bullish on the lithium price, as you might expect, but investors are a little more concerned about the move we've seen in price. So therefore, they might not be as aggressive as they might rather be.
Yeah, that's totally correct. And, from a corporate perspective, I think no one is really out there with a certain outlook yet. I think we'll have to wait probably later this month and with the 1Q or like 4Q actually result coming in February and March. But I think that the message has been consistent between all the major players in the saying of lithium pricing in 4Q and very likely for the first half of 2023, they have a great confidence and visibility and should be similar to 3Q. And I think that alone should give confidence actually into the market. And they also are pretty confident in terms of like demand in China, in terms of EVs. Another part, I think, of the demand that is not looked at by a lot of people is the energy storage. And those demand and those needs are growing. And it's actually kind of like my bridge to solar and to renewable. You cannot have renewable energy coming and booming if you do not have energy storage. So I think, again, there is plenty actually of opportunity. You just have, from an investor perspective, I think just be selective. And actually the current valuation that we're seeing probably offer like a very good entry point.
And so just to summarize, you're still very bullish on the sector, and you see opportunity on any sort of pullback.
Yes, definitely. Yeah, I think that's a very good summary. If you look at, I would just give the major producer. I think, especially over the last actually 2-3 weeks, there was a significant pullback. I think it just opened your door to see the stock price again, 20-30% over the next 6 months.
Corinne, as we wrap up, what trends should investors be looking to throughout 2023?
And I might sound like a broken record, but really China, I think this is the one that you want to look at. Obviously, I think people want to look from a supply perspective, but this is, I would say, almost a little less relevant than it was even a year or 2 years ago. I think everyone understands that supply doesn't come as fast as we maybe wish. So I think it's really the demand side. China reopening, watching what's going to happen over the next 3 to 6 months, I think is crucial for the industry.
Well, Corinne, that was a great overview of lithium valuations, and I want to thank you for spending time with us today and sharing your insights. Once again, thank you.
Thank you. I appreciate it. Have a good day.
Hi, Keith. Thank you very much for joining us today. How are things in South Florida?
Fantastic. Happy to be speaking with you.
Keith, Piedmont has 4 different projects, and I want to discuss them based on the sequencing of each project, beginning with Quebec. And the project in Quebec is very unique because it will be the next actual producer of lithium hydroxide in North America. Why don't we just start with a brief overview of this asset, including your partner, Sayona?
Yeah, we're partnered with a company from Australia called Sayona Mining. They've been active in Quebec for some time. We got to know each other a couple of years ago when they were looking for an offtake partner for their OTA deposit, which is near Val-d'Or. We had some good conversations, and as part of those conversations, they identified the opportunity to team up to acquire North American Lithium. It was in receivership at the time. North American Lithium is the biggest spodumene ore body in all of North America. It's the best located in Canada, being very near Val-d'Or, and it's the most advanced in that's already was built. It was built about 10 years ago at a cost of around $400 million. It operated off and on. Never really got ramped up to kind of full potential, but we saw potential there and teamed up with them. So we acquired North American Lithium in the middle of 2021. We have been, did some engineering work to really figure out what we needed to do to make that asset the best performer it could be. And we identified around $80 million US of capital improvements. We own 25% of the project. Sayona owns 75%, so we funded it 60-20 essentially. So our 20 million has been funded into that project, and things are going very well. We're basically on schedule to start up spodumene concentrate production in the first half of 2023. As you indicated, that'll be at least 2 years ahead of anybody else in North America, and the market desperately needs the concentrate. So, and people are particularly interested in material from North America these days. So we're really excited about it.
And when this operation is fully up and running, what will be the annual production, and what will be the cost to produce a ton of lithium?
Cash cost is identified as $590 a ton. Throughput is about 168,000 a ton. I think we're hopeful we can bring that throughput up a little bit. My working number is 180,000 tons a year of capacity, we hope. And cash cost might be at around that number. That's the best estimate today, 590 a ton, which from historical levels sounds high. Spodumene prices used to trade in that range or even lower. Spodumene prices are obviously a lot higher today. There's been a lot of inflation everywhere in the mining business, as you know. So I think it's actually quite competitive. And from a delivered perspective, being 30 or 40 miles from Val-d'Or is a big advantage for this asset. It can deliver material and save $50+ a ton in transport costs versus other Quebec operations which are further north.
I'm glad you brought up Val-d'Or again. I want to let our viewers know it's a town of 30,000 people. It has very rich mining history. It's a 6-hour drive from Montreal, which puts it very close to the US border. And of course, that's the most important market in North America. But Quebec is also one of the great mining jurisdictions in the world. And maybe you can just touch on how the provincial government has, what they have done to help facilitate putting this mine back into operation.
Yeah, I will. Before I do, I'll just echo your comments about Val-d'Or. It's a fantastic place to operate. Quebec has a rich mining culture, so does most of Canada. Val-d'Or is, really important mining town. Agnico Eagle has, big operations there, have forever. Osisko, big operations in that region, others as well. So there's a lot of mining talent, and there's a lot of mining, trades, contractors, et cetera, that are right there. There are parts inventories. If something breaks, you can maybe get it fixed within an hour or two, as opposed to having to fly something into the north. All the other spodumene assets in Quebec are further north. They will all be fly-in, fly-out operations. They'll all require long truck hauls for product. We won't require that. It's a big advantage. So we like the location a lot. I think with respect to this particular project, Investment Quebec was a lender to the project under the former owner, CATL out of China. When the project went into receivership, Investment Quebec became a shareholder. So they were one of the shareholders that was really deciding who would secure the asset. And I think they liked the combination of Sayona, entrepreneurial Australian company with a long history in Val-d'Or region, and Piedmont, an American company with, at the time, kind of a deeper bench and other assets that we were developing and a deeper, at the time, balance sheet. So the idea was we were in a good position to really bring this back into production and make it sustainable. This asset's operated 2 or 3 times before and never really made it. So we're very confident this time, particularly in a market like this, it'll work very well. As we think about what we might do downstream in Quebec, and eventually we'll go downstream in Quebec, we do know the people in the government of Quebec well, and I think there'll be opportunities for them to assist from a funding perspective there. That's something that I think you're going to see in a lot of parts of the Western world. Funding these projects isn't always that easy. NAL's easy because it's a brownfield project. It needed very little capital, but these can be really expensive projects. It's an industry that's growing so fast that lenders, traditional banks, don't have much experience with lithium. They don't have a history. They don't have a rich history of lending to greenfield lithium projects and seeing them be successful like they would in copper or gold or coal or something. So it's having government involvement can be really helpful.
That's a great overview of Quebec. I want to move on now and discuss your next project to come online, and that'll be Atlantic Lithium, which is based in West Africa in the country of Ghana. What's the timeline on this project, and how will this project be used in conjunction with your North American operations?
So the project name is Ewoyaa, E-W-O-Y-A-A. Our partner is Atlantic Lithium. So they're currently developing the project. We're earning into a 50% interest. It's a fantastic project. It will be a large producer of spodumene concentrate at relatively low cost. It's got kind of coarse pegmatite, large crystal size, easy to process via dense medium separation, a lot lower capex, a lot lower opex than flotation, which we need to use in Quebec and we'll be using to some extent in North Carolina. So wonderful ore body, planned production of 255,000 tons a year. And we hope to be in a position where we can begin construction about a year from now, so late 2023, and be in production in late 2024. It should take only around a year to build and begin to ramp. That's obviously determined on, conditional on permitting. That process is underway. We've applied for our mining license. We'll also need an environmental permit. Atlantic's handling most of that. Ultimately, our plan is to take our share of that material. We have an offtake agreement to buy half of that material, to bring our share of that material into North America, into our conversion facilities, particularly in Tennessee, which we'll talk about next, where that'll be a lithium hydroxide plant in eastern Tennessee that will convert spodumene hydroxide to lithium, or spodumene concentrate to lithium hydroxide, and we intend to bring that material principally in from Ghana.
So why don't we move on now and discuss U.S. operations, beginning with Tennessee.
So Tennessee is exciting. It's our newest project. We used to name it LHP2, Lithium Hydroxide Plant 2. It's now Tennessee Lithium. It will be the biggest lithium hydroxide plant ever built in North America when it is built. There are some others of similar size on the drawing board. It's intended to produce 30,000 tons of lithium hydroxide from approximately 200,000 tons of spodumene concentrate. We'll bring that material in from, again, Ghana and potentially Quebec and potentially other sources. And it's just in an ideal location. Tennessee is a pro-business state, wonderful infrastructure, good tax environment, good labor environment, and a lot of customers nearby. So our site in Eastern Tennessee is about halfway between Chattanooga and Knoxville, two pretty significant cities. We're adjacent to an old foundry that shut down about a year ago and laid off 720 people. So one of the hardest things today is finding employees for an industrial facility. There's a lot of built-in labor base in our area. We're really excited about that. We're on rail. CSX main line goes right by the property, very close to the river system as well. We can barge material up through the Mississippi River system. And again, surrounded by customers. People like Ford and General Motors and VW and Nissan are in Tennessee. GM and many others are nearby. LG just announced the world's biggest cathode plant is going to be built in Tennessee a few weeks ago. So it's a great location, and we're very excited to be building it there. And operating in the U.S., it's just a good place to operate a chemical business. Most of the mineral in the world, you think about us bringing minerals from Quebec or Ghana, a lot of the spodumene comes from Western Australia. Those are big mining centers. They're not big chemical processing centers. That's an issue. There's a level of expertise in chemical processing that isn't found everywhere. It's very significant in the southeastern U.S., and we're very happy to be operating there.
Well, that's all very interesting. I didn't realize there were so many OEMs within that area.
And new announcements, and so VW has a big EV plant they're building in Chattanooga, 40 miles away. Ford and SK have announced two very big battery plants in I think near Nashville. Nissan has a big plant near us, et cetera. So, we're nearby all the plants in neighboring states like Georgia and Ohio and Kentucky, et cetera. So it's a great place to operate.
So the last project we have to discuss is Carolina Lithium. It's based in North Carolina. This is at the feasibility stage. It's got very attractive economics. Why don't we just touch on that, the net present value, the internal rate of return, and the payback?
Yeah, the numbers are good. We published a DFS 12 months ago, so and now we're working through the permitting process. It's an exceptionally good project. It's the only project in the world where there will be a spodumene, mine and concentrate plant, byproduct facilities, there'll be byproduct quartz, feldspar, and mica, and then a lithium hydroxide plant on one site. So it'll be, it's very well located strategically. As you may know, you may not, basically all the world's lithium came from North Carolina from the 1950s to the 1980s. The industry essentially was invented there. We're on a very big, prolific mineral belt called the Carolina Tin Spodumene Belt. And the asset just benefits from so many things. There's a built-in labor pool. Charlotte's a big city, 30 miles away. We have great infrastructure, southeastern U.S., good tax environment. The tax rate in the state of North Carolina is going to zero in a couple of years. It's at 2.1% now, I think. And again, we're very close to the customers. And importantly, we have a unique ability in North Carolina to monetize byproducts. So most spodumene pegmatites in the world have other minerals as part of the ore body, but they're located remotely and they can't monetize those. They're not worth enough. Spodumene concentrate's worth today 8,000 or more a ton. Quartz or feldspar concentrate might be $100 or $50 a ton. You can't ship that from northern Quebec or Western Australia to a customer. It doesn't make any sense. We can. Half the revenue from the precedent mines in our area was byproduct quartz, feldspar, and mica. So we've already signed one offtake agreement with a feldspar customer. We'll sign others as we get closer to kind of the building. It's a 2-year construction process for that project. That is, so that's some time away, but we're really excited about it. We think it'll be the lowest cost producer in the world, in part because of the byproduct opportunity, and looking very much forward to advancing it.
Keith, when all 4 projects are at full production, how many tons of lithium will be produced annually at Piedmont?
We'll produce almost 500,000 tons of spodumene concentrate, our share, and we'll produce 60,000 tons of lithium hydroxide. So if you do the math, we'll produce more spodumene concentrate than we need for that lithium hydroxide capacity. We essentially have the 3 mines, Quebec, Ghana, Carolina. We have 2 chemical plants, Carolina and Tennessee. We do plan to build conversion capacity in Quebec. It's important to us. It's a great place to operate. St. Lawrence Seaway, low-cost hydro, abundant spodumene resources. Quebec will be an important player in the lithium business going forward. It'll take time, but we're very focused on that. We haven't figured out exactly what that means yet. NAL, North American Lithium, has an existing sort of partially built carbonate refinery that we're studying the restart of. So a pre-feasibility study should be published in March, April. We're also thinking about other options, whether we want to produce hydroxide instead of carbonate. Hydroxide is generally where we're focused. Whether the right thing to do is take that old plant and upgrade it or build a new one. So there are a lot of conversations going on, but we're excited about that. So we'll be a big player. I mean, right now in North America, we produce as a country 15,000 tons a year of lithium hydroxide. We're going to need over 650,000 tons 5 years from now. So I'm not good at math, but it's a big multiple of what we have currently. We intend to produce 60,000, so roughly 10% of our requirements. That's not nearly enough for the customers. They all want more. So we're anxious to bring our projects online. Focus number 1, 2, 3, and 4 is execution. But we're always on the lookout for new opportunities to get our arms around some mineral resources. And once we control those, building more conversion facilities.
So that's a great overview of your current operations. Why don't we move on now and discuss your balance sheet? You have a lot going on, all of which will require a lot of capital. How much cash do you currently have on hand, and how will you allocate that cash in the coming year?
Yes, we had at September 30th, our last quarterly, we had 118 million of cash. US, this is all US dollars. We also own around $200 million worth of stock in Sayona Mining and Atlantic Lithium. Those are important partners of ours. Our equity positions are nice, but they're not the raison d'etre. We have operating joint ventures that are why we're in those projects. So from a funding perspective, we always have the option to fund our development by monetizing some of that stock. That'd be less dilutive for our shareholders. And then we have a series of other ways to raise money. So we did receive the grant from the US government for Tennessee, 142 million. We are in conversations with the Department of Energy for loans for Tennessee and Carolina. They have a program called the ATVM program, Advanced Technology Vehicle Manufacturing. It's a low-cost lending program that's been in place for over a decade. Tesla, Ford, Nissan all used it back, I guess, 10, 12, 15 years ago. And it provides loans at with attractive terms, and it's focused on electrification of the vehicle business. Lithium hydroxide qualifies. That's something we helped accomplish. And we hope to get loans from those guys. And we're also very focused on really 2 other areas of cash generation to fund our development. One is it's increasingly common to have greenfield lithium producers like us talking to car companies and battery companies about offtake agreements, including prepayments. So if we're going to sign in Tennessee, for instance, an agreement to sell somebody 10,000 tons a year of hydroxide for 5 years, that's 50,000 tons. The spot hydroxide price is 80,000. That's potentially a $4 billion contract. We think it'd be great if somebody might pay 5 or 10% of that up front. That would be a really attractive way for us to fund the development in Tennessee. So those are conversations that are going on. We're having similar conversations with respect to the spodumene concentrate from NAL that we'll be marketing. And we also hope to have cash flow from NAL. We think we'll be in first production in the first half of next year, sometime between March and June. Time will tell. We'll have our first shipment as soon as we can. We're assuming that'll be Q3 next year. It might be sooner, but let's say Q3. And if we can ship 30,000 ton shipments, 6 times a year, that's 180,000 tons. We can generate some really strong cash flow. So we have an offtake agreement with the Sayona Quebec joint venture. And this is how the whole conversation with Sayona started, was for them to be a supplier to Piedmont. So we have an offtake agreement to buy the greater of half of production, or 113,000 tons a year of spodumene concentrate. We have a floor price in that agreement and a ceiling. We're now in a position where the spot price is higher than the ceiling. So our purchase price will be the ceiling of $900 a ton. And we'll then on-sell that to customers at whatever price we can achieve. Spots over 8,000. We may not get spot, but we're talking to people about that now. And we would hope to have our first shipment next year. And if you do the math, we're shipping 30,000 tons and we're receiving, you know, the kind of margins we're talking about. We could have very substantial cash flow every quarter or every shipment, and that can really help fund a lot of the development. And we'll see how things go. We're not, you know, the market needs lithium fast. We've got a schedule that's ambitious. We think it's achievable, but it's ambitious. If at the end of the day, the best way to fund some of the development is to slow down a quarter or two or three and generate more cash from our offtake agreement in Quebec, that might be what we do so that we minimize any dilution to shareholders. But if things go well, it's possible we won't ever go back to raise money from shareholders, depending on the timing of the projects.
Keith, as you mentioned, the economics associated with lithium production is very attractive. Spot lithium in China is trading anywhere from $70,000 to $80,000 a ton. Long-term contracting with OEMs is anywhere from $40,000 to $60,000 a ton. But many near-term developers and producers are trading at steep discounts to where the lithium price is. Why do you think that is?
I think it's a combination of factors. I think factor number one is the lithium prices have gone up very significantly, very fast. So spodumene concentrate prices have literally increased 20 times in 2 years. So if spodumene concentrate was trading for 400 or 500 in 2 years ago, it's now over 8,000 in Pilbara's auctions. Lithium hydroxide spot price that I see is 85,000. It was 10,000 2 years ago. So the prices have moved up a lot. And I think the market, and the second factor I think is, and I should add, I think those prices are sustainable. I think we have a real supply-demand crunch that doesn't go away, so I'm bullish on pricing. But I think for a lot of observers who aren't as close to the industry as I am, and they say, well, gee, prices have gone up a lot, is that possibly sustainable? I think the answer is yes, but for a lot of people, they just don't have enough background in lithium to have confidence in that. So I think people are modeling pretty conservative price outlooks. And many analysts have pretty conservative price outlooks. That's fine. That's what makes a market. My own view is I think prices will be higher for longer, and I think the market will, you know, pay for the profitability when it happens, and when it's clear that prices will be higher for longer, and we'll just have to be patient and let that develop.
And just as an extension of the valuation discussion, when you're on the road marketing and you're attending clients, you're meeting with a lot of large buy-side clients, I'm kind of curious what they are saying. Do you think there are a lot of long-only funds out there or hedge funds that are not involved in this trade yet just because of the move up in lithium?
Yes, there are a lot of long-only funds and hedge funds not involved in the sector yet. Not so much because of the recent move. I think that's why so many are interested. They're trying to get their arms around it because it's a good trade. If you're a hedge fund, it's a good trade either way. You just want to understand it. I would say this, we started as an Australian company, so I spent a lot of time in the Australian market. We re-domiciled a year and a half ago. Australian institutions understand lithium really well. They've been at it longer. 100% of spodumene production in the world today happens in Australia. So they know the industry better than most. And all the institutions in Australia care, many of them used to own our stock. As our stock moved up and as we re-domiciled, a lot of those people exited. In the US, there are a handful of large only funds who know the industry really well. There are any number who, you know, on a spectrum of not basically hardly know it at all, but are starting to focus on it because it's interesting. You know, if you think about where lithium demand is, if you go at 10 or 15 years, lithium could be the same size market as copper, which I just learned that recently. I was really actually surprised to learn that because lithium currently is a pretty small niche business, but it's going to be big. And people need to care and they need to learn about it. I think one of the issues that affects valuation is most of the big money in the US hasn't invested in lithium previously and don't have a lot of conviction on price. They don't know if price is going to be 80,000 or 8,000 in 2 years. They don't. Many of them don't have a point of view. At least they don't have a point of view that they're confident in to make the bets. I think those that do will win if they basically trade it the way I would trade it. The good news is there's just an abundant amount of money in the US, as you know, and as those funds become more knowledgeable, more comfortable, and higher prices for longer will help that, there's just an opportunity for a lot of money to flow into the sector. We need a lot of money to develop our projects and to really drive value to a very different level because most of the big guys aren't in the stocks, particularly the pre-producer stocks like ours. And we've structured ourselves perfectly for that group. We've become an American company, so we're not only listed in the US, but we're also domiciled in the US. That makes a big difference. As you may know, you can't beat any US indices if you're not domiciled. So there are a number of Canadian and Australian lithium companies listed in the US. They're not in the Russell 2000. We are, because we're American, and we're the only one other than the big guys like Albemarle and Livent. So we're really positioned for that. I had a conference 2 days ago with, I had 8 one-on-ones with big funds in New York. None of them own our stock. They all are very focused on it, and the time will come where I think they'll be buyers. And that'll be really exciting. That's when the market takes off. You know, it's a bad analogy industrially, but I was involved in most of the IPOs in the coal business from 1999 through the mid 2000s. And there weren't any pure play coal companies trading in the US in 1999 when Consol went public. I worked in that deal. There were 15 or 20, 5 or 6 or 7 years later. And you had an industry that the market didn't understand at all, and then became very, well schooled in. So I think lithium will have a different ending than coal for all kinds of obvious reasons, but we're at that point now where companies are coming to market and the market's learning, and it's going to take time for the market to develop that comfort.
Keith, as we wrap up, what can investors expect in terms of news flow in 2023 from Piedmont Lithium?
Yeah, no, good question. We have a lot going on. We have 4 projects. There's activity everywhere. I think the highlights, I would say, in Quebec, we should have first production in the first half. That's a huge milestone. We should have shipment shortly after that, say 90 days after that. Piedmont should announce who our customers are going to be for that offtake agreement, kind of between now and then. So we're talking to people who might want to buy that spodumene concentrate. So that'll be an important milestone too, when we announce that, the material we're buying through our offtake agreement will be selling to, we hope, blue chip customers on good terms. In Ghana, we should publish a definitive feasibility study. That's a 30 million ton resource. It will grow based on the great drill results they've been announcing. In Tennessee, really, we hope to have our air permit in April, May. We hope to be funded by June, July, August to build that project. Part of that funding will be prepaid offtake. We hope we're going to be the biggest lithium hydroxide producer in North America. We're talking to all the right customers, and we'd like for them to help build the project by funding some of their contractual obligations in advance. And then Carolina Lithium, the big events will be permitting related. So first and foremost, a mine permit, which we hope to get soon, hopefully by the end of March. That'll be a real catalyst. The market's been skeptical about that. Our team's worked really hard on that. We think it's a fantastic project for the industry, for the country, for the state, and for the community, and we are looking forward to getting that approved. So a lot of catalysts, a lot of good news, and most importantly, this time next year, we should have had 1 or 2 shipments. We should be a producing company with revenue, and I think that'll put us in an entirely different discussion relative to valuation.
Keith, that was a great overview of Piedmont Lithium, and I want to thank you very much for spending time with us today, and also for providing your insights on valuations.
Appreciate it, James. Very happy to take the time. Thank you.
Hi, I hope you're enjoying the conference. Did you know that 80% of our viewers are not subscribers to our channel? And that means you. So please hit that subscribe button, and thank you for your support. Hi, Robert. Thank you very much for joining us today. How are things in Vancouver?
Very good, James. Thanks for including Standard Lithium and myself in this event. Extremely impressive group of panelists. And Vancouver is wet as usual. I'm looking forward to getting back to Arkansas very soon.
That's great, Robert. Standard Lithium is different from many other developers within the lithium sector because it's removing lithium from brine tailings using the direct lithium extraction method, or DLE. And I want to start here. Explain how the DLE process works and how is it different from other mining methods that are used in lithium mining?
Yeah, no, it's a great introductory question and explanation of who Standard Lithium is. So about half of the world's lithium, or just over half of the world's lithium, is produced from hard rock mining, predominantly coming from Australia. and then 30 to 40% of the world's lithium is produced from brine, primarily from South America. And the brine that's produced in South America is primarily produced using evaporation ponds. The direct lithium extraction process works with a brine feedstock, so lithium enriched brine. And it is a selective extraction of lithium from that brine. So it's not filling large evaporation ponds in batches and waiting for that water to evaporate. It works to pull lithium from the brine selectively in a continuous fashion. It's deployed globally already in various jurisdictions, most notably in Argentina. Livent uses a form of direct lithium extraction at their project, their Hombre Muerto project, going on 3 decades now.
Robert, that's a great explanation. I want to touch on the state of Arkansas now. As you mentioned, your projects are located in Arkansas, and it's not a state we think of when it comes to mining. So maybe you can just touch on the government and also the communities and what their views are on mining and how they are to work with.
You know, Arkansas has been a tremendous place for Standard Lithium to build a business. The receptions that we've had at the community and the state level have been with open arms and looking how they can assist us in bringing this project into commercial production. It's unique of any project in the United States. It may not be a familiar name in the mining space, but they've been producing minerals from brine since the late 1950s in Arkansas, predominantly bromine. So Arkansas is number 2 in the world for bromine production. South Arkansas, they pump over 9 billion gallons annually for bromine production to the surface, and it's reinjected. What that means for a company like ours is there's a mature regulatory statutes and policies in place. So there's no surprises when you're building a project. There's overlapping industries that we can rely on for contractors and expertise that don't exist on other mining projects. So it's really the best place, in my estimation, to build a lithium project in the United States. You have a tier 1 lithium resource in the Smackover Formation, the host aquifer for the lithium brine. You have a region that has an extensive experience on how to handle those fluids, regulatory statutes, expertise, and then you also have 100 years of oil and gas or energy development culture that makes people more familiar and supportive of this type of industry. It's really a really special place to build a project.
You raise a very good point, because when you do have the stakeholders on board, including the government and also the communities, it makes the whole process so much easier.
Yeah, no, you can see just in news headlines the challenges mining companies face globally getting stakeholder support on their projects. And I couldn't ask for a better place to choose to work in than South Arkansas.
Robert, Standard Lithium has 2 projects in the state of Arkansas, the Lanxess project and the Southwest Arkansas project. Can you just provide a brief overview of each project and what stage of development they're in?
Yeah, the Lanxess project is a partnership with global chemical company Lanxess, hence the name Lanxess project. Lanxess operates 3 brine processing facilities on 150,000 plus acres of permitted units. So it's unique in that it's a brownfield project where we're tying into that existing brine processing industry. The Southwest Arkansas project is a greenfield project, but with many of the same benefits of working in the region we are. It's a 35,000 plus unitized brine acres, 25 miles west of the Lanxess project. But the important thing to understand is it's the same aquifer. It's the same brine. The only difference really is one is a brownfield project, a greenfield project. And on the greenfield project, the lithium grade is much higher. On the Lanxess project, we're starting with a lithium grade of around 230 to 250 parts per million. On the Southwest Arkansas project, the grades go as high as 460 parts per million. So as we extend the project to the west, we see a trend of the lithium grade getting higher, which is unusual when you have a project usually start at a high grade and then you go into the margins and the grade decreases. As we go to our greenfield project, the lithium grade concentrations improve, which is very unique.
And we should also touch on your exploration project because, of course, you want to grow beyond these two projects. So why don't you just give us an idea of what's happening within your exploration program?
Yeah, over the last 2 years, we have been working to identify areas within the Smackover Formation, so the host aquifer, where we believe that trend of increased lithium concentration continues. So west of where we are at our Southwest Arkansas project, we've spent the last 2 years doing reviews of thousands of miles of 2D seismic, getting water samples from operators in the area. And in November, we announced that we had initiated a exploration expansion program and had drill spinning on targets that we have to the west of our Southwest Arkansas project. We'll be wrapping up that exploration program very soon, and we'll be releasing the analysis from those test sample programs very soon after that as well. But the important thing to really highlight is the formation, the Smackover Formation, is a globally significant lithium aquifer. It's the only tier 1 lithium brine resource in North America, the highest reported lithium concentrations in North America by far, in a region where you can build a project. We like to call it the Permian Basin of lithium. So as we build out our projects in stages, responsibly building projects sequentially, we will be able to point to opportunities to significantly expand our land portfolio, and our purpose for this is to make the Smackover Formation the primary lithium development in North America to address North American lithium demand.
Robert, I want to move on now and discuss your partnerships because another element that makes Standard Lithium very unique is its partnerships with Koch Industries and also Lanxess. Many people in North America are familiar with Koch Industries, but they're not familiar with Lanxess. So provide us with a little bit of background on Lanxess. Where's the company based and what exactly do they do?
Yeah, Lanxess is a global chemical company. They're headquartered in Cologne, Germany. They acquired the assets that we're working with Lanxess on in South Arkansas in 2017 through the purchase of Chemtura. So they now operate the largest brine processing facilities in North America. The 3 plants that they operate in South Arkansas, processing 4 billion gallons worth of brine annually for bromine production. Standard Lithium entered into agreements with Lanxess soon after they made that asset purchase. That's when we got into South Arkansas. So very serendipitous timing for our entry into South Arkansas, aligning with Lanxess's entry into the bromine business. So it's an important relationship for us because it's allowed us to leverage that investment and that asset they have and put our attention into de-risking and scaling up our direct lithium extraction process and not have to deploy tens of millions of dollars in exploration and resource development work. We've been able to tie into that existed permitted operations to put all of our attention on managing, scaling, testing, and proving out a extraction process that we can now look to scale to commercial production. When we go towards commercial production, the project also benefits from those permits and existing operations that Lanxess has. So phase 1A of our commercial development, that will be located at one of the Lanxess facilities, their Lanxess South plant, on private property. So not having to deal with the federal government or extensive permitting reviews, dealing with private property on a project that's already permitted for brine processing, production and reinjection, having infrastructure already at the site, rail, water, power, parking lot, adjacent to a 4-lane highway. It really puts us on a clearer path to getting into commercial production, removing many of those infrastructure and permitting risks that every other project faces. On phase 1A, we've identified 2 permits that are required: a minor air emissions permit for evaporator crystallizers and boilers, and a surface water discharge permit, state level permits only, no federal permits. So that partnership with Lanxess allows us to move the project towards commercial production with a greater sense of clarity and certainty on the permitting.
That's a great overview of LANXESS. Let's move on to Koch Industries. How did that relationship with Koch begin, and why exactly did they make an investment in Standard Lithium?
Again, I can speak from Standard Lithium's perspective, or my perspective. Can't speak on behalf of the Koch team. But we started a strategic outreach program in the summer of 2020, looking to bring in a strategic investor and also an investor that would bring in expertise to help us build the projects that would be complementary to what we're doing with LANXESS. Koch was near the top of that list. In the spring of 2021, we started a dialogue with the team at Koch Strategic Platforms. By the summer of 2021, we were able to do site visits and tour the project together and align on not just how an investment would assist Standard Lithium in moving this project towards commercial development, but on how different Koch businesses would be able to benefit Standard Lithium from their expertise on how we build the project. Koch made the investment in December of 2021, $100 million US. They're our largest shareholder. Subsequent to that, we've made several announcements with other Koch-related business. Most recently, after a competitive bidding process, Koch Optimized Process Design, or OPD, was awarded the definitive feasibility study and full front-end engineering design for our Phase 1A project. That's underway now. We announced that in September. That will be completed in the first half of this year. That's an important business relationship. They were awarded that on the technical merits for the project. It's an expertise that they're bringing. We're also working with Koch Engineered Solutions. If you toured the project and you were at our site in Arkansas today, you'd see a Koch membrane pilot plant pre-treating the brine before it goes into our demonstration plant. We're also working with Koch Minerals and Trading, one of the world's largest commodity brokers, on procurement and costing and logistics for reagents and materials for the project. So they are an extremely important investor, but they also bring skills, expertise, know-how that benefit the projects. All successful projects require partnerships. We're benefiting with LANXESS, permitted brine operations, and with Koch as an investor, and also their expertise across numerous businesses that align with what we're building in Arkansas.
And you mentioned that Koch made a $100 million investment. What percent are they as a shareholder?
They're about just between 7 and 8% shareholder in Standard Lithium.
Robert, I want to move on now and discuss your balance sheet. As you mentioned, you have a definitive feasibility study on Phase 1A coming out in Q2. So I don't want to discuss the economics, but why don't we just touch on your balance sheet? How much cash do you have on hand, and how will you allocate that cash in the coming year?
Yeah, as of September 30th, our last reporting quarter, we had over 120 million Canadian in the bank. So we're fully funded for all of the work, the definitive feasibility study on Phase 1A, also the preliminary feasibility study that's underway on the Southwest Arkansas project. So both of those are fully funded. We will still have a strong treasury at the end of those, which includes the expansion work that we have underway and that exploration program as well.
And given the nature of your business, you have a lot of funding opportunities, one of which would be the Inflation Reduction Act. What's available within the IRA which can help you move your projects along? Yeah,
the Inflation Reduction Act has been an incredibly important piece of legislation, tax policy, if you like, coming out of the administration. It's driven a lot of attention towards domestic mining or for critical minerals resources. Two specific tax policies in there, 48C and 45X, project tax credit or a manufacturing tax credit. Both of those will be extremely beneficial to U.S. critical minerals projects. Additionally, there's other policies. The Defense Department, the Defense Procurement Act or the Defense Production Act, DPA, is allocating non-dilutive grant money available for critical minerals projects as well. So we're looking at all three of those policies on how we can bring in advantaged non-dilutive capital to move these projects into commercial production. Within the IRA, a lot of attention is paid on the EV tax credits. So how those will be doled out based on how the supply chain allocations are for battery inputs, but hasn't really been paid attention to by a lot of analysts, investors, is those tax policies. So the 30% project tax credit that can be applied against your CapEx, or the 10% annual manufacturing tax credit for a project against your OpEx. Both of those are specific to US projects, and both of them really should get a lot of attention because they are non-dilutive, they can be considered and they're transferable, so they can be used similar to in the solar industry as almost like cash towards either your project finance or on the manufacturing side, on the operating side, the tax credits there. So it's an extremely important move by the US government to address that position where the country is at the challenge of having outsourced their supply chain for so many years. This new policy is really going to make US projects stand at the front of the line for project development, not just because it's required for the batteries, but because they're very cost competitive as well.
And Robert, another option available to Standard Lithium and other lithium producers would be OEMs and also battery manufacturers. Is this something that you are exploring?
Yes, I don't think we're unique in that the interest in securing offtake, but I can speak from my personal experience. I spent a significant amount of time over the last year bringing global auto OEMs to South Arkansas to show them what we're building, why I believe that we'll be the first new project in the United States to go into production. Tier 1 battery companies have been extremely interested in securing offtake as well. Additionally, there's interest from global energy companies who are looking to get into the lithium or the critical mineral space as well. So those levels of interest are at a point where, and again, this is probably across numerous companies, not just our own, where creative ways to bring in either prepayment schedules, project ownership, non-dilutive ways to get projects financed through creative project finance structures. Those are all things on the table for us. The interest is been incredibly high since the IRA was announced as well, specific to sourcing domestically. We'll be continuing to do that work over the next few months, bringing more and more of these offtake interest parties to South Arkansas. And if the right deal structure is in place that works for Standard Lithium, its investors, and also for the offtake customer, strategic partner, it's something that you may look for an announcement coming in 2023.
And I am curious, when you said global energy companies, why would they want to be involved in lithium production?
They bring a certain level of expertise that's required in this industry. We're working in the Gulf Coast, remember. So drilling, managing fluids, reservoirs, this is an area where they've got 100 years of expertise. And it's an opportunity for them to get into this space, to bring that expertise, to bring that to the projects, become project partners in that. And it also brings that exposure to the new energy economy that many of them are seeking. And it's done in a way that works for both parties. So it brings that expertise to a company like Standard Lithium as we build out our greenfield project for managing the reservoirs, pumping brine and re-injecting. And they have very large checks that they can write to bring projects online as well.
Robert, as we wrap up, as you've already mentioned, you and your team have a lot going on in 2023, but maybe you can just summarize for investors what they can expect in terms of news flow in the first half of the year.
Yeah, no, we've got a tremendously exciting year in front of us. We have the definitive feasibility study underway on phase 1A of our LANXESS project, which will be delivered in the first half of 2023. We believe that will lead to a positive result and a final investment decision And our target is to begin commercial construction in 2023. That'll be the first new project built in the United States in almost 60 years. Also, the delivery of the preliminary feasibility study on our Southwest Arkansas project, building on the PEA that we completed in December of 2021. We intend to go directly into a definitive feasibility study upon completion of that PFS on Southwest Arkansas. Additionally, the expansion work that we announced in Q4 of 2022 and how we are going to build a much larger company than the two significant projects we currently have. Additionally, we'll be bringing on new team members, and then, as I mentioned, potentially bringing in the strategic alignment, offtake agreements, and those discussions that are underway. It's going to be an incredibly exciting year, significant milestones on the horizon. I encourage investors to pay close attention to the work that we have underway. This is a project in an area where you can actually build a lithium mine. It's not going to be, it doesn't face the challenges the industry faces with mining in the United States.
Well, Robert, that was a great overview of Standard Lithium, and I want to thank you for spending time with us today and sharing the story. And we look forward to the continued progress you and your partners are making in Arkansas. Thank you.
Thanks, James. I really appreciate this, and I look forward to catching the entire video when it's posted with all of your panelists. You got a great lineup.
Thank you. Hi, David. Thank you very much for joining us today. How are things in Toronto?
Things are great in Toronto. How are you doing today?
I'm very well, thank you. So, David, before we do a deep dive on electric vehicles and lithium-ion batteries, I have to ask you, given that you work for General Motors, what kind of car do you drive? Are you driving an internal combustion engine or an electric vehicle?
Well, it's funny. I've just finished putting a new charger on the side of the house, and so I've got the capacity to do both. And one of the great joys of working at GM is I get to drive a bunch of different vehicles and test them out as they come forward. So I've driven our new Cadillac Lyriq, I've driven our new all-electric Hummer, and of course our Chevrolet Bolts and Bolt EUV. I happen to be in a GMC Colorado right now because I got to move something this weekend. So we've got a vehicle for every purpose.
And the Hummer is a rather big vehicle. Maybe you can just tell us a little bit about the performance as an EV.
Sure. I mean, it's sort of fitting in a sense that our first pickup, if you will, that's on the market and sold out for a good period of time is the Hummer EV. And so it uses our new proprietary Ultium battery system. And our Ultium electric motors. And so when you have a beautiful electric motor at the front and the rear axle, the acceleration on the Hummer is equivalent to our Corvette. And so it's a powerful vehicle, and it has a really superior range because it's a super battery. The batteries are getting better and better and better. And it's got all of that off-road capacity. It's got a thing called crab walk that allows you to move through the rocks and the pylons, so to speak. So it has a lot of innovations, but it is really proving that for a pickup driver, you can go electric, have all the range and the power that you need, and you can also have an awful lot of fun.
David, the last few years have been transformational for electrification throughout the world. Globally, 10 million EVs were sold in 2022. That's up from 6.6 million in 2021. General Motors has made a monumental shift away from internal combustion engines toward electrification. Maybe you can just provide us with a little more context on this shift and how many EVs GM currently produces and how many will they be producing in the future?
Sure. Well, it's just about 2 years ago that Mary Barra announced that our intention is to have our entire fleet, light duty fleet, so everything from the small vehicles up to the pickup trucks, fully battery electric, no hybrids. You know, that this is with our own ownership of a battery capacity that will continue to develop, et cetera, and to have that by 2035. But in the shorter term, we will have the capacity with our own sort of supply chain that we're working out, which we can talk more about. But by 2025, we'll be producing 1 million electric vehicles in North America per year, and more in the rest of the world as well, probably twice that amount annually. And so we are making the shift. It's going to take the next decade for that shift to be completed. That's important because the charging network has to catch up with the electric vehicles. We have to make sure our grid is strong enough and adaptable enough. The vehicles themselves are going to now put a generator in your driveway. So literally with one of our pickup trucks, you'll be able to plug your house into your truck and run it for a week if you need to. But that's also an opportunity, like you see sometimes in the farm communities where people sell electricity into the grid. You'll have opportunities as consumers to sell power from your battery during the day if you're not driving your truck, and then charge it up cheaper at night. So all of these changes are going to put pressure on our electric grid, so we watch that carefully. But we are moving very, very quickly. And a big part of that is to, as I say, own our own battery chemistry. And we're going deeper into our supply chain in this new sort of North American supply chain than we've ever done before. And that's really part of, I think, one of the most significant global trends in the economy right now is the sort of nearshoring or friendshoring in North America that's taking place right now.
And I want to have a deeper discussion on this whole battery supply chain. But before we do that, I want to touch on one of your subsidiaries, and that is BrightDrop, which is focused on manufacturing a fully electric commercial delivery van. And one of your plants, Cami, which is based in Southern Ontario, became the first full-scale EV plant in Canada, and now it produces the BrightDrop Zevo 600. Maybe you can just give us a little bit of background on the history of the formation of BrightDrop and also the transformation that occurred at Cami.
Sure. Well, BrightDrop is one of the first new brands for General Motors in living memory, really. We narrowed down some of our brands. So, of course, we've got Cadillac and Chevrolet and GMC and Buick, and now BrightDrop as well. And it's targeted for the commercial market. It's all electric. But it's also based on some very significant innovations and innovations that were driven in large part here in Canada. In our engineering center. It's one of the things that is really a strong point of our business in Canada. We've got over 1,400 software engineers now and innovation drivers, really. So what BrightDrop does is it has a system, not just it's a fully electric van, cargo van, and that's exceptional in itself and will have tremendous environmental benefits. But when we tested out the system, which is a combination of mobile lockers that drive themselves like a autonomous vehicle, that allow you to stack your cargo more efficiently and deliver your cargo more efficiently, combine that with a software system that allows our customers to manage much more effectively. We tested the system with FedEx on the streets of Toronto, and they were able to achieve over 25% improvement in their delivery productivity. So think of a multi-trillion-dollar industry that delivers packages to your door, and this is a new innovation that will allow them to not just go green, but vastly improve their productivity in using the system, which will only continue to improve and so I was very proud to participate with the Prime Minister of Canada and the Premier of Ontario to open the plant. It was the fastest launch of a plant, a change of a plant in our history, fastest launch of a product in our history. We have a tremendous order book already and just great interest in the product. And it's really coming back to when you learn about BrightDrop being a productivity improver, as well as an electrification opportunity to reduce greenhouse gas and help delivery companies that also have ESG and net zero types of aspirations as we do to achieve that. So it's exciting.
And you said it was the fastest conversion ever. How long did it take exactly? And what was the cost in converting from an ICE plant over to an EV plant?
Sure. Well, we had our factory in Ingersoll, Ontario, used to produce the Chevrolet Equinox. It stopped producing the Equinox in April 2022. And in the beginning of December 2022, we opened with a completely renovated plant. So think of this enormous series of football fields inside, completely empty, wall to wall, new concrete floor poured, some of the largest and new robots in the world, anchored in place, tested and developed. And the first Bright Drop vehicle rolled off the line on December 5th. So that in manufacturing terms is extraordinarily quick. But the whole Bright Drop team and business, which really is serving the North American market to start with, but has aspirations beyond, has launched extraordinarily quickly. And our target is to be achieving a revenue base of $1 billion next year. So it's an extraordinary story, and it's a really exciting thing for us, not just in Canada, but for all of General Motors.
And I just want to clarify the one point you just made. When you say $1 billion, that's just for Bright Drop.
That's Bright Drop revenue, yeah, adding to our General Motors revenue, which is, this transformation, which part of which is electrification, and that's an extraordinary challenge, is also one of the biggest business opportunities as well. And so our intention is to double our revenues as General Motors, add over $100 billion of additional revenue, and do that through software, do that through ancillary services. When we now have a battery business, we're opening 4 full-size battery plants in the United States. One's open in Ohio, another will open in the southern United States next year, and 1 per year as we go forward. This also allows us to open up GM Energy and enter into the business of helping commercial and even home customers to be able to utilize home batteries, batteries for other purposes. Some other forms of transportation could be like Bright Drop is demonstrating, but we also have a very considerable hydrogen fuel cell business as well, which I remember launching a fleet of over 100 hydrogen fuel cell Equinox back in 2005, I think, in Oshawa. So this is a tried and true, excellent technology as well, and for trains and for semi-trailer vehicles and whatever that tend to come home and can use a hydrogen refueling capacity at the home fleet base. That might be another electrification solution as well. So we think of ourselves as a platform innovator as opposed to an automotive company now, and that certainly makes life exciting.
And how many EV delivery vans will be produced annually at the CAMI plant?
Our target next year be about 50,000. That's a smaller volume than we had in terms of producing sedans or crossovers before, but it's a very big van, and so we'll continue to ramp up. We'll be introducing other variants. We have the vehicle is branded Zevo, so we have a Zevo 600 and a Zevo 400 that we've sort of unveiled, and there'll be others that will tailor themselves to the needs of our customers.
And maybe you can just tell us what companies have already placed orders.
Certainly, yeah. Well, FedEx was really our anchor client, and a lot of testing with them. Merchants in the United States. There are some food companies, so some of these trace lockers, as we call them, are now refrigerated so that we can move food, which opens up another area. And in Canada, our first customer was just announced as DHL. And so delivery companies, cargo companies, anyone that is moving parcels to home or business.
So that's going to be a massive market. Do you have any idea how big that market is? How many delivery vans there are in North America?
Off the top of my head, I don't. But I think on a global basis, from from a financial analyst point of view, it's an enormous market. Delivery, obviously, delivery in Delhi is different than delivery in London, is different than Paris, etc. And so there is just an absolutely enormous opportunity. But the fundamental core of it really comes down to, one is, something that is fully electric and therefore helps you to reduce your GHG footprint as a delivery company, and two, an opportunity to be much more efficient in the delivery of your packages. And I think we've learned after that that we're not turning back in terms of much more delivery to the door in all their different mechanisms. And so this is kind of a timely set of innovations to help our customers in that area, and frankly, we're extremely delighted with the orders that are coming in and the interest that is there to really understand the product, test it out, and see if people that run fleets can start to make that transfer now.
I want to move on now and discuss the battery supply chain. As you already mentioned, you want to go fully electric by 2035. And to do so, that's going to require a lot of lithium and other metals. And many consulting firms have said there's not nearly enough lithium being produced to meet the demand for EVs. So I'm wondering how GM is tackling this supply issue.
Yes, we have an extraordinary supply chain management team. Our global procurement and supply chain group I actually spend probably most of my time working with right now, because there's an enormous part of that opportunity here in Canada. But we have secured the battery supply chain requirements that we need till 2025 and beyond. And we're adding to that with partners. And a really good example of that, and being first in doing so, is around what we're doing in Quebec right now. So we're the first company that is really setting up a cathode active material plant, which is really, you have cathodes and anodes. Anodes tend to be graphite based. Cathodes tend to be nickel and cobalt and lithium based, and manganese. And so we are actually a part owner of a processing facility that is starting off at about a $600 million size and will probably double or triple in size as we go forward in Bécancour, Quebec. Will be sort of the anchor investor in that absolutely sensational location with tremendous very low cost and zero GHG electricity, which is an enormous benefit when you're in the electricity business yourself. So the cathode active materials will be produced there. We have secured a supply agreement with Lavallee, which is one of the world's larger nickel producers. In North America, and we may come back to this, there are some tremendous incentives to be localizing your supply chain. And if you want to take full advantage of some of the things in the Clean Energy Act aspects of the Inflation Reduction Act in the United States, this becomes really critical and important. So Lavallee, I mentioned, Lavallee is going to, for the first time really for anyone outside of China, be producing nickel sulfate in Canada. And so they are a company that is absolutely great, high grade nickel. Nickel is one thing that Canada is really enjoys great reserves for, much more so than the rest of North America. And so with Lavallee, we will really be producing enough nickel sulfate to produce a very high percentage of our batteries. So to have that agreement and partnership with Lavallee is great. The nickel sulfate will then be part of what goes into our cathode active materials plants.
So I'm glad you brought up Bécancour. The province of Quebec has been at the forefront of this innovation of building out this battery hub in the town of Bécancour. And I'm just kind of curious what the province of Quebec has done versus the province of Ontario or the state of Michigan to just propel this whole notion of EVs forward.
Yeah, well, I say that all of them are excellent. All of them have some great strengths, and we work with all of them obviously intently. Of course, the center of our business is in Michigan, and our relationships there are absolutely extraordinary. We're going to be building a battery plant in Michigan, which is a very significant aspect that falls on from the plant we're building, the Lithium plant that we're building in Ohio, and then one in Tennessee. In Bécancour, I think my discussions with them started 2 years ago with Premier Legault. They enjoy an incredible advantage in their hydroelectric power base. And as I say, when you're producing electric vehicles, and the whole point is to move your company to a net zero stance, you want to have power inputs into your factories that will make sure that they're also very low GHG. So that's a tremendous advantage, and it's the most affordable power in North America. But on top of that, they had available land. The site in Bécancour was at one point designated to be a steel factory, I believe. And it's a large, already approved set of lands, and it's owned by the province. And as a result of all of that, your ability to go quickly and to move things forward is enhanced, as well as tremendous logistics, in that we're sort of nestled between the minerals in Canada and our battery factories just south of there. So it's a really ideal location. It allows us to take full advantage of Canada's natural resources. We just this week have a new lithium plant that is just approved and moving forward in Quebec, and we'll have others to follow. We have sources of that in California and the like too. So this is much more of an integrated ownership and investment in our supply chain than we have traditionally done at General Motors. As we go through this massive transformation, that we want to control our destiny more, we want to have the ability to innovate. Batteries are at an early stage on a relative basis. We had over 100 years to perfect the internal combustion engine. We're just starting with batteries. And so the holy grail of this transformation is to create batteries, which are the biggest cost input into an electric vehicle, that have greater energy density, so the customer can travel further on a full charge. Just should get the same range as you get in your internal combustion engine, maybe more, but then to get it at a lower cost as well. So that's the engineering challenge that we all face, is to get more energy density for lower cost. And having an ownership or partnerships all through that supply chain, right down to the mines, to the mobility, is one of the strategies to make sure that as we see not just some of the boutique companies that move into the electric market, but now those of us that will sell electric vehicles at all sizes and all price points to our customers have a strong advantage and can drive innovation in this area. So I think electric vehicle innovation is just begun. Probably the biggest concern I see is making sure the charging network keeps up for our customers, to enable the great electric vehicles that are going to be coming to market to be fully charged and ready to go.
David, as we wrap up, what other innovations in EVs and also the battery supply chain can we expect from General Motors in the coming year?
Sure. Well, watch software. Software, a lot of people think it's about batteries and chemistry, and it is, but the software is going to help to achieve those gains. We've got the second largest hub of software for General Motors outside of Detroit, parallel with Silicon Valley, happening right in the Toronto area. Look for innovations beyond the automotive sector. Think of our homes and our businesses using batteries to be able to power at effective costs and lower our greenhouse gases. Think about other sectors, from aviation to trains becoming electrified, hydrogen fuel cells, and a lot more. So, it's a time of transformation, but it's not just cars. It's really an enormous change for our whole economy.
And because of the rich resources that Canada has, we're going to play a fundamental part in the evolution of the EV.
My grandfather was in the mining industry, and he'd be very proud to know that the mining industry has now become part of the auto industry.
That's great. Well, listen, I want to thank you very much for making time with us today and also telling us what's happening at General Motors and also sharing what's happening at Bright Drop. I look forward to the day where I can see one of these delivery vans driving down my street.
James, it'll be real soon, and this has been a pleasure. Thanks so much.
Well, that concludes our conference, and I want to thank everyone for taking the time to be with us today. We have some amazing conferences coming up in the coming months, so please subscribe to the channel, hit that notification button so you can be kept up to date on future events. Once again, everyone, thank you for your support.